Good morning, everybody. Welcome back to another Market Open. It is September 28th, 2023, 8:46 a.m. Today is a Thursday morning, and it is a very interesting morning because there's a lot of things that are happening today, or at least supposedly supposed to happen today, and we're going to talk about that. First thing we got to talk about, obviously, is the Palantir NHS deal. Got some updates, kind of. Also don't have some updates. I'm going to get into that. That'll be the first segment. Then we have to talk about rising bond yields, the 10-year at the highest level since 2007, topping 4.6%. This morning, there's a lot of macro analysis we have to do in the context of bond yields going up and equities obviously going down. Yesterday, we saw a nice little rebound going into the end of the market at around 4 p.m. or 3:30 p.m., where the S&P that was at 422 hit 426. It recovered pretty nicely, almost as if nothing had happened yesterday in terms of its decline. Right now in the pre-markets at 425. Palantir at $15.14 in the pre-markets, up 2%. In the pre-market, it was up 7% yesterday. So a lot of interesting stuff going on. Maybe someone knows something, maybe someone doesn't. We also got to talk about the Meta deal. We have to talk about GameStop. We have to talk about Peloton. We have to talk about Twitter potentially becoming profitable. Gas prices, the Saudis. There is a lot to discuss on this Market Open. So thank you all for being with me here today. Brian C., Kevin, Roy, Dominic, Joseph, Bike Pimp, Alice. Alice says, I've never been more impatient waiting for something for a very long time. I have some updates. It might not be the answers you necessarily want right now. I'm sorry about that, but I do have some updates on this NHS deal. Hakoon, Teddy, Julian, Petros, Zelena, Donald Trantai, Gordon, Damian, Sasky Rose, Kane, Sethi Roth, Edmund Zeng, Garcia, Quarantine Quartet, David, Mark Mallison, Vince is Bullish, Max Deuce, Martin, Niels. Thank you all for being here. Sanjay, Lars. All right. There we go. Let's get into the first update. This is the main news we've got to discuss, and we've got to talk about the Palantir deal. So let's get into this right now. What's going on with Palantir? So we do not have the NHS deal yet, and I'm going to show you exactly how you can not rely on anybody if you want to know about this deal. You can actually check about it yourself. So here's the website called Contracts Finder, gov.uk.contractsfinder. I'm going to put it in the chat. Everyone can use this website whenever they need to use it. And if you go to this website and you use their search engine, you can essentially search through every single contract they have. So what I'm going to do right here is type in Palantir. Should be typing in Big Daddy eventual tech company, but I'm going to type in Palantir instead. Okay. And I'm going to select awarded contract on the procurement stage. So I want to know the contracts they've been awarded. I'm going to press search. Now, I did this 20 minutes ago and there was no NHS deal. If I do it now and there's an NHS deal and it's on the live stream, that will be majestic. That would be just absolutely incredible. I don't think that's going to happen because it hasn't come out yet. So let's see what happens. Press search. And more likely than not, we will get the July 5th deal that came out on July 5th, right? So this was 24 million pounds, 31 million euros. This contract was the ability for them to transition from some of the existing data houses they were using into the federated data platform, and they gave Palantir the deal to be able to transfer all the data. So as you can see, there's a ton of contracts here, and unfortunately, it's about 2 p.m. in the UK. I think if the contract was awarded, they would have announced it by now. I don't think they announced the contract for anybody because the UK media would have covered who won the contract, right? So no one has covered the contract win, but they definitely didn't announce the contract being awarded to anybody yet. And so in that context, it does not seem like we have a deal yet for Palantir. Now, I said this yesterday in my video that I put out saying that supposedly we're going to get a result, but I did preface that video by saying governments are bureaucratic, they're inefficient, and a lot of times what they say we're going to get ends up not being what we're going to get. A lot of people were asking, how do you know it's going to be September 28th, or why do you think September 28th is going to happen? And this is the main reason. It's not just like a wild guess that we all had in the community. This is from their website right here. If you look at this from their website, indicative dates, January 10th, 2023, the issuance of stage 1, which is going to be the start of the tender process. And by 16th August, they completed the final tender evaluations in the UK. So by August 16th, Palantir probably knew if they got the deal or not. And from what I'm understanding, I think Palantir knows they got the deal, which means January or September 28th was supposed to be the contract award. Again, these governments are incredibly inefficient, and sometimes they announce things, sometimes they don't. So maybe we get it in a couple hours, maybe we don't. But this was the logic for why we all thought we were going to get the deal today. And now it's just a question. Saskia said maybe they're waiting until their own markets close. Maybe. I mean, I have no idea because I've never lived in the UK. I'm not that familiar with how UK procurement law works. But we'll see if it ultimately comes. And if it does come, then that would be obviously like a very big deal. If we look at here, this is when they got the July 5th deal. They didn't say what time they put this out. I was trying to look for that as well. I was like, could we see what time they awarded this? And it was just on July 5th, right? There was no like 8 a.m. or 9 a.m. or anything like that. So we don't know. Now, even though we don't know about the NHS deal, we do know about something else. Palantir did get another $60 million in addition to the $250 million we got this morning. And, oh man, shout out to David. David, my guy in the chat. This is one of my best friends from high school. David, wow. Thank you for joining the chat. I love you, man. This is, I got to take a second to give a shout out. This is like my best friend, my brother from another mother. Known this guy for 10 years. We used to do a podcast together. David, I love you, bro. Thank you for showing up today. I know you're probably super busy. That is my guy. David is absolutely my guy. David, man, love you. All right. So Palantir got this $60.9 million deal from the National Institutes of Health. And so think about this. This is kind of crazy, right? The NIH gave Palantir a deal, not the NHS. The NIH is the National Institute of Health in the United States, and the NHS is the healthcare organization in the UK. So we got a deal from the NIH, not NHS, and it is around healthcare, but it's not exactly the healthcare deal we were expecting to get. And we get this after a $250 million deal from the Army. As you can see right here, total contract value, $60.9 million. Of course, it's 60.9. Why not? It's a 3-year deal. So it's about $20 million a year. Nothing super crazy, but $20 million a year from 2023 until 2026. And it is awarded to Palantir Technologies. There's a easy government website. If I find it, I'll put it in the chat. If you just type in U.S. government contract finder, it'll probably show up. I mean, it's pretty common. And you can go into the website and literally just type in Palantir, and it'll show you every single contract. That's how the community ends up finding these contracts pretty quickly, because we just use that as a resource. So this is not the NHS. This is NIHS. This is the NIH, which is still not bad in my opinion. I mean, for us to get $250 million 2 days ago, and to get another $60 million, the reason we're getting this compounding effect of contracts is because going into Q4, this is when the DoD, the general government for the United States, they have to start offloading a lot of the capital that they were going to allocate to these companies for these deals. They have to get the job done. And so if they're going to get the job done, then, that means Palantir is going to be awarded a lot of contracts, and not just in the United States, across the world. Q4 is when governments tend to award contracts. That's when Palantir got the Ministry of Defense contract from the UK for $91 million in December of 2022. So I do expect us to potentially get some more contracts from October to December. And that might be a good boost for earnings. I don't know. I still think on earnings, we're going to probably just beat slightly the $557 million we projected. But overall, these contracts are very good for Palantir. Again, in the context of NHS, we're just gonna have to wait. Maybe they'll be announcing it soon. I'm sure as soon as it's announced, people will know. Sure, everyone's ready to they've got their trackers and they're trying to figure out what's gonna happen. But in regards to an answer right now, it has not happened. The deal is not here yet. Not yet. The music major says, I work in government contracts, and those timelines are estimates, but are subject to huge fluctuations, especially for the new contract and not a follow-on. We have awarded contracts 6 months late. That makes a lot of sense. The only pushback I would give to that music major is that I don't think it's about awarding the contract. I think it's about announcing it. What I mean by that is the tender process to complete the bid was done in August. Now, if I'm wrong on that timeline and that tender process hasn't continued, then you're absolutely right. But if the contract approval phase or the tender process phase has been finished, the question now becomes, when are they going to announce it? And maybe there is some delay on when they're going to announce it, and it takes a couple of days or even a couple of months to announce it, to finally approve it. But if the tender process for the bid is not done yet, which from all the research I've done, it's done. It's been almost a year and a half. I mean, they started this process in March of 2022. So, I mean, you would argue that it should be done. If it's not done, then 100%, it's probably going to take more months for them to figure this out. There are sources that I have in the world of Palantir that are telling me the deal has been decided. That's another reason I would push back on that, and that there is a winner of the deal. That's what I've heard from my sources. I'm putting my investigative journalist hat right now, that there is a deal, it is done, and eventually it will be announced. The question becomes, when is it going to be announced? How is it going to be announced? Is Palantir getting part of the deal? Is Palantir getting all the deal? I don't know that details. I do know that there is a winner, from my understanding. Now, I could be wrong. My sources could be wrong. So if it is a new contract and not a follow-on, yeah, maybe it's 6 months late. And if it is 6 months late, then that's going to suck. But, we'll see if it ends up happening. You guys are saying go to Ether's tweet. Let me go to his Twitter real quick. See what he said. Oh, wow. Hold on. We have some update. What's going on here? Hold on. Foxglove just tweeted, we've decided to hit pause on our social media channels. Foxglove, for those that don't know, is the institution that has been spreading all the propaganda around Palantir. Why are they pausing their social? Hold on a second. Here's the article. This is actually really important. Why are they doing that? All right, let's read. This is September 28th, 2023. This just came out. Again, Foxglove is the media organization funded by George Soros that has essentially been spewing a lot of negativity around Palantir. There's always a fine line to walk using social media as a nonprofit who, as a core of its part of its work, fights the exploitation and monopoly power of the world's most powerful social media companies. You're never far from a hot take from the internet's finest keyboard warriors. So you sue Facebook, but you also use Facebook. Interesting. I mean, that's true. I mean, yeah, you sue Facebook, but you use Facebook. Because Facebook's actually valuable. So nonetheless, but our principle has been that as long as social media remains an effective and coherent form of communication, we should use it to inform and explain our work to supporters, partners, and journalists. By the same token, we felt it made sense to engage only with the most influential social media, Facebook and Twitter. We have now made the decision that the services offered by these social media platforms are so degraded. What the fuck? What? It is no longer an efficient use of our limited resources to engage with them. What? You can't press post? That your limited resources are stopping you from pressing the button tweet? What? We don't do this lightly, but Foxglove has a responsibility to our amazing supporters and funders to spend every penny soundly. And in a way, it costs you money to post on social media? Like, what? This is not a blanket statement that Foxglove shall never tweet again. For our first 4 years, we have enjoyed using social media. Should a time come when social media seems worth engaging with, we'll come back. The best way to stay up to date with our work is to join our mailing list. This is interesting. What do you guys think? Wow, this is interesting. So if we're putting the tea leaves together, one could argue, okay, so maybe a little bit of a stretch, maybe not. One could argue Palantir got the deal. Foxglove, again, the organization that has been incredibly violent in terms of media coverage around Palantir, could essentially have said, you know what? Like, how are we supposed to embrace social media if Palantir got the deal, right? Because we've been saying they're this evil tech company that's horrible for the world, and now our own government in the UK gave them the deal. It's kind of like you have no legs to stand on, right? It's like if your own government, the thing that's funded by the taxpayers, decides that the NHS is going to give the deal to Palantir, and you've been doing article after article after article saying that, and by the way, you've been funded very handsomely by George Soros to come up with these articles to say Palantir is not getting the deal. Maybe they threw in the towel. Maybe they threw in the damn towel. Maybe that's what's happening. Honestly, so we don't have an update on the actual deal yet. Let me go back to Twitter. So this is Ether Square. He tweeted it. He just tweeted it right now. Oh man, the deal is not out yet. Deal is not out. Don't see it yet. All right. So wow. Yeah. See, even Arnie saying crying for Palantir to get the NHS deal. This might be a big deal, guys. So if you're just joining in right now, Palantir, we have no update on the NHS contract. Foxglove, the organization that has been incredibly mean to Palantir, and mean is a light way to put it in terms of saying they're an evil company, just put out a note that they're quitting social media. Okay, let me break down why this doesn't make sense in a second, and then we'll move on to some more macro stuff. First of all, it costs nothing to post on social media outside of the salary of the person you're paying to post on social media, which I can't imagine is more than £30,000, £40,000 at best to post some tweets all day, to write some articles. And they don't even tweet them. I tweet more than these guys. Like they don't tweet that. They're not doing 10,000 tweets a day. They're doing like 4 tweets a month or something. For them to quit social media makes no sense. Number one, so their argument that it's hard to use is ridiculous. Number two, they're saying it's not an efficient use of their resources. Twitter has 500 million users. Facebook has 3.5 billion users. There is not that many platforms I know of, let me know if you know of, that have that many people, that have the smartest algorithms created on planet Earth to find an audience for literally anything you tweet. You could tweet about religion, it'll find an audience. You could tweet about fitness, it'll find an audience. You could tweet about Palantir, it will find an audience, because those algorithms are smart. And there's a shit ton of content on the platform, so they know how to filter and curate and accentuate the arguments or the tweets that matter to the most amount of people. So the idea that they're not getting efficient distribution or reach is just ridiculous. Twitter's not stopping them from tweeting. Twitter's not, I mean, they're getting tons of clicks on their articles. It's not like that's happening. This makes no sense. This makes absolutely no sense at all. Sherlock Cookrager. Yeah, I'm putting on my Sherlock hat right now. So if you're just joining, the NHS has quit, or sorry, not the NHS. Foxglove has quit social media. They put out a blog post today. My tinfoil hat theory is that even though we don't have an update on Palantir getting this deal, I think that the NHS is really upset that potentially Palantir got the deal and maybe they know about it and we don't. And as a result of that, they've essentially tweeted that they're leaving Twitter because they have no legs to stand on to confront the reality of the fact that they've been wrong for the past 2 years covering this Palantir saga. Wow. What an update. What an update. And again, if you're joining, Palantir did get a $60 million deal by the NIH, National Institute of Health in the United States. So they got a deal on that as well. So some guy on Palantir Reddit wrote that he is close to the deal and it will get announced next week, not today. Don't know if this is reliable though. Look, I have my own sources and the deal is decided from what I understand. I don't know if we got the deal. That is the one thing I don't know. What I do know is the deal is decided. When you're in this world, when you've been covering Palantir, when you've done 2,000 videos on Palantir, you end up getting sources all over the community and the deal is done. The question is, did it go to Palantir or it is announced? I don't know. I have no idea. And so that's also why I've been saying in every video, please do not buy the stock based on this deal, because if we don't get the deal, the stock could react violently. If we do get the deal, the stock might just sell off on the news, right? So if you're betting a stock purchase on this deal, first of all, the deal is over 5 years as well. So it's like, yeah, it's a nice incremental boost in revenue, but it's not like $500 million comes at once, right? If that happened, then yeah, like that's like a almost 20% growth. Or like that's not happening. So it is going to take some time for this deal to factor in and for the market to truly understand it. But we don't have an update on that yet. So I do think we will get the deal. I don't know when it's going to be announced, but let's see eventually when it will be announced. I just don't think that NHS is that big of a deal. So I sympathize with people that are saying the NHS is probably not that big of a deal in the context of like the stock price or the money. It's definitely, in terms of the money, it's great, but it's not like, you know, billions and billions of dollars. What really matters, and again, let me just make this point, the NHS has 70 million people underneath it. Palantir is not just managing a couple of hospitals. If we get this deal, 70 million, let me say that 70 million people's healthcare is being controlled by Palantir. Now, Foxglove thinks that's like an evil doomsday scenario. If you actually know the truth about Palantir, you know that this is just like Ukraine. This is their opportunity to show that their software works, it's effective, and it has the ability to have cascading effects long-term for the company, which the byproduct of that will be increased revenue growth. But long-term, if you're managing 70 million people's healthcare, do you know how many socialized healthcare systems exist throughout the entirety of Europe? Even Canada? I mean, like, if the NHS that has been inefficient and bureaucratic for the past 30 years turns into a monster in regards to just being this efficient system that gets everyone the help that they need, that is directly going to be correlated to Palantir. That is going to be Palantir's fault. And if that happens, the cascading effects of that for other European healthcare systems, I think, are going to be profound. It's going to be very important to get Palantir into a bunch of different hospitals. And what that is going to solidify is that this is an operating system for healthcare that should be implemented into every major social institution on the planet. The reason being, if you're a socialist country and you don't believe in privatized healthcare and you believe in socialized healthcare, technology is the middleman that actually allows the socialized healthcare to be effective. Because if you don't have the free market and natural competition, you need something that, you know, makes it effective, and technology would be the middleman, and I think that would be Palantir. So it's a big deal. We'll end up seeing if it's happening. It'll be a big deal, and we'll see where it goes from there. All right, let's transition to the macro. We got a lot of stuff to talk about the macro, and then we'll keep going from there. So bond yields. We have got to talk about this. This is absolutely insane what we saw last night and what we're seeing early into the morning. Let me share this right here. The 10-year Treasury bond in the United States of America, 4.653%. 4.653. So we are hitting levels we have not hit since 2007. 4.6 before we were at 4.4. That was pretty bad. Then we got to 4.5. It's like, all right, that's bad. 4.6 is the bond market basically saying we don't trust equities right now. Why does this matter? The reason this matters is because if the yield continues to go higher on the 10-year, and personally, I thought 4.4 was the top. I did not expect us going to 4.6. So now I feel skeptical of myself saying that we're not going to hit 4.7 because, I mean, if you round up 4.65 or is already at 4.7, then equities have a lot more pain. The reason equities have a lot more pain, and I was talking about this on Twitter today, and then we'll get into the jobs report, and then I'll play a segment that I wanted to talk about, is because if bonds go up and the yield you're getting on bonds is higher, obviously the basic argument is right. Like, why would I put my money in stocks if I can get 4.5 on bonds? I don't have to worry about taking all that risk with stocks. But not only is it just that, it's that if bonds go higher, equities haven't found a bottom. And so my argument is that as much as it sucks seeing the 10-year at the 4.6, if we can get it to 4.7, 4.8, hell, if it even goes to 5%, there's going to be a lot of pain in the stock market. If bond yields go higher than where they are right now, equities are in for pain. However, if bond yields capitulate at 4.6, 4.7, 4.8, whatever it may be, and there's a lot of factors for why it's going up, oil, auto strikes, etc. If they capitulate and they find their top, equities will find their bottom. So bonds have to find a top, equities will find a bottom. It's like a gay marriage or a gay relationship, right? With two guys. You got to have a top, you got to have a bottom. So there's got to be a top to the equity, to top to the bond market in terms of 4.6, 4.7, 4.8. And eventually, if the S&P is 410, 415, 420, 405, that will find a bottom as soon as bond yields start going down. Right now, we haven't seen bond yields go down. And because we haven't seen bond yields go down, we haven't been able to find that much relief in the stock market. Now, it's really confusing, though, because the S&P was down 422 yesterday. The S&P had a bloody day, and Palantir was one of the only green stocks in the entire market that was up at $15 while the S&P was at 422. Right now, the S&P is at 426. And so it's kind of confusing. Either the market doesn't trust these bond yields, or when we get into the open, the market will kind of show its wrath on the fact that rising bond yields are up, and we're going to get a little bit more of a decrease in the equities market. One more thing before I share a clip from CNBC talking about bond yields. U.S. jobless claims, 204,000 jobs are open today. This came out just 20 minutes ago versus the 214,000 jobs we expected to be open. This is a good thing. If we have less job openings, we have more competition for wages, which means employers have leverage on how much they're going to, which means if they have leverage, wage prices have to go down, and they don't they don't have a wage price spiral, which would be worse for inflation, which means less job openings, better to ultimately bring down inflation. So we expected 214. We got 202 last time, so we're a little bit up from the last jobs report, but we are down from what we expected, and 202 was down significantly from what we expected last time as well. So that's not too bad from an inflation perspective on the jobless claims. Let's go on to discussing a little bit more about bond yields and kind of where the market is thinking about yields and equities right now.
There you go. You're going to wave at everybody. Let's show you U.S. equity futures at this hour. We're going to be talking a lot about investing, where the markets are going, both in the equity world, bond world, and more. Right now, the NASDAQ looks like it's going to open down, but you're looking at the Dow up, the S&P 500 up as well, 33 points on the Dow right about now. Let's show you Treasury yields. We got Mr. Leisman on hand in just a moment, but
the 770
versus what's the historic?
The historic is 2.
Wow.
If you look at the Treasury, money is expensive relative to it already being expensive.
Can I order up a story on that for like tomorrow?
I did a little bit of that a couple months ago, and it's probably worth hitting again. And Diane Olick also has been following this idea that mortgages are expensive relative to where they ought to be. Yes, they are high and ought to be higher, but there's an argument that they're too high relative to Treasuries.
Yeah,
and that has to do with the inherent risk in there right now.
The Dow was up all yesterday morning.
And then
the yields that can't go up when the yields. So we were at 4.5 yesterday on the 10-year, and we went well above 4.6.
449. When you were here yesterday morning, and then you went home and
that's why the
went to bed at 3 o'clock like you go to bed.
That. Yeah, not 3.
3?
Well, I mean nap, but it's not in bed. It's
But Joe, it has been a pretty.
Sorry, I was muted in that second. What I was saying is that bond yields going up, as you can see, the Dow Jones and NASDAQ falling yesterday. It's incredibly hard for equities to find any breathing room with bond yields going up. And so that's kind of the problem that was going on there. And that's what he was talking about in that report. The biggest issue for equities right now is that if bond yields are going up, it's just really hard for equities to find breathing room. And if they can't find breathing room, there's going to be a fundamental problem in getting any capital appreciation. We have a little bit of breaking news right here from Mariana, who covers Bank of America, and then we'll get right back into the macro. So price target of $18 on Palantir confirmed. This is what she said. This is one of the main analysts that covers Palantir from the $250 million contract. She says, on September 26, Palantir was awarded a $250 million contract to continue to conduct R&Ds in AI and machine learning in the U.S. Army. The contract extends an original one-year effort by 3 more years through 2026. Palantir was originally awarded a one-year $40 million contract in September 2022. I wonder if she watches my videos, because I did mention that. In March 2023, this increased by $60 million. Under this contract, Palantir has been awarded $92.2 million in full year 2023. While the annualized awards do not imply upside from current offerings, that's also what I thought. I didn't think the stock really should move on that deal, because I thought the market just expected it. We positively view the long-term reward as it provides near-term revenue security, upside opportunities as shown by the original contract modification, and a unique position to work closely for the Department of Defense developing the next-gen AI and ML solution. So we have an official analyst report that covers Palantir talking about why the $250 million was a good deal for Palantir. Let's go back to some of this macro and see what we've got here.
Rough couple months in the bond market. You have rising bond yields and falling prices, and that's pummeled some investors who've been holding, especially on the long end. But analysts think this run, guys, to higher rates, it could have further to go. Since early July, here's what's been happening. Yields are up from, remember, it was just 375, now 464. At this level, what do you want to call it? Spitting distance to 5% or higher in a 10-year is all of a sudden within reason here. I talked yesterday to Bruno Brazina. He's the rate strategist, Bank of America. He says the 10-year could be driven to 5%. The following things. You got this hawkish Fed and a higher neutral rate. Now, that hawkish Fed that took away cuts next year, by extension, also extended quantitative tightening. So it was a double U.S. Downgrade of the debt, better economic fundamentals, a higher neutral rate. And then the big thing here, the massive supply, much more supply than anticipated by markets. It's supply more than anything that looks to be driving rates. Now, in fact, much of the increase in yields, it's come with little or no repricing of inflation expectations or even better economic data. So these are real rate rises here. Rick Reeder from BlackRock, I'm going to talk to him later on the stage at Delivering Alpha. He says of the $500 billion of issuance this week, it's, quote, it's an extraordinary amount and it's going to continue.
And that right there is the scary part, right? Let's take a look at U.S. equities, and then we'll get on to a couple of other stories. We have 17 minutes into the market open. That is the thing I wanted to kind of talk about today, that if bond yields are continuing to go higher, and you got executives from BlackRock basically saying it's going to continue, there's going to be an issue. I mean, there's going to be a tough issue with the market being able to become reasonable in the context of what's going on right here. As you can see, Palantir up $15.13, up 2% in the pre-markets. I don't know why we're up 8%, 9% in a day. We were up 6.38% yesterday, up 1.89% today. Either we sell off in the morning or someone knows something. And the reason the stock is up is because they might be trying to buy before something is announced. And I don't think that's too much tinfoil hat theory, because we saw what happened with Splunk, right? Someone made 45,000%, not dollars, percent, by betting on the Cisco Splunk acquisition that apparently no one knew was going to happen, but somebody in the world knew it was going to happen. And so, I mean, people definitely know things are going to happen. SoFi right now at $7.63. You got Netflix at $3.77. S&P 500, again, holding on nicely to 426. It's at 425.54 in the pre-markets, what with the 10-year being at the highest levels it was at since 2007. And that is the scary part of what's going on with this market and what's going to ultimately happen over the next couple of days. Kyle, you say good morning. Good morning. Thank you for being here. Bay Ray, you say you're in the airports. Where are you going, Bay Ray? Where are you flying to today? Are you flying to the UK to figure out if we got this NHS deal? Because I don't know if we're getting this NHS deal. So I would love to know if you are flying there. If you are just joining, we got about 16 minutes until the market open. Palantir has not been awarded the NHS contract yet, but Foxglove, the media organization that has been funded by George Soros, who was an investor in Palantir but dumped his shares after Peter Thiel openly decided to support Donald Trump, has funded that organization to spew a lot of propaganda around Palantir. They have decided to quit social media this morning. We just went through an article where they put out that we're done with social media, and we think the platform of Twitter and Facebook have become degraded to democracy. Therefore, we're leaving. It's an interesting argument. I don't think it's the best argument, but nonetheless, they are gone. Let's get into one other bit of news as we are on the topic of Twitter, and then we'll move on to some of the other stuff happening in the equity markets. X will become profitable, formerly known as Twitter, in 2024. Linda Yaccarino was on an interview yesterday at the Vox Media Conference, and she said that it seems like Twitter is going to be profitable. Now that I've immersed myself in the business and we have a good set of eyes on what's being predictable, what's coming is that it looks like in early 2024, we will be turning a profit. Why does this matter even if you are not an ex-investor? Because the reason they're going to be profitable is because she said 90% of the top 100 advertisers are back on Twitter. That is a good thing for the economy in general. 90% of the top 100 advertisers have returned to the platform in the last 12 weeks alone. That is a good thing for the macro. If advertisers are willing to come back to the platform and actually support, that means they have money to spend. B, they're looking for alternative sources outside of just Meta and Google. And there's more money flowing around in the system if you've got advertisers coming back to the platform. So overall, I think this is bullish for the broader economy if you've got advertising that's starting to come back. Obviously, for Twitter, it's a very good thing because they lost 60% of their advertisers when Elon decided to buy up the platform. So to see 90% of them come back is not bad given Twitter. It's still pretty controversial. Elon still tweets whatever the hell he wants. The free speech is still, from what I'm seeing, pretty abundant outside of the whole Turkey and, governments shutting down stuff. Elon really just doesn't have control over that. X looks like it's ultimately going to be profitable, and that will be a very good thing for Twitter, which another reason this is really important for Twitter to become profitable. Joseph, thank you for putting this in the chat. If you're a Tesla investor, Elon should not need to sell more Tesla stock. There was an article a couple of days ago where the rumor was that he was reportedly thinking of selling SpaceX stock to fund some of the debt on Twitter, because Twitter is in debt. Twitter took a massive amount of debt to be able to end up doing this. So the fact that he was willing to sell SpaceX stock and not Tesla stock, because he promised Tesla shareholders he wouldn't be selling Tesla stock, is pretty profound, because SpaceX is not even valued as richly as it could be valued yet, especially because it's on the private markets. And he was willing to unload with that stock just to be able to fund some of the Twitter debt. He's in a tough situation, right, with the Twitter debt. So the fact that Twitter is potentially turning a profit, they might be able to pay off their debt, not as much as they would want to, but at least in a way that doesn't burn them into the ground, which is going to be really important at the end of the day for Twitter and for Tesla shareholders. Entrepreneur Archive says, when is the deal announced? Again, if you're just joining, the NHS deal has not been announced. Palantir did get $60 million today from the NIH, which is the National Institutes of Health in the United States. NHS deal supposedly was supposed to be announced today, has not been announced yet. One of the reasons it's probably not be announced is because the government is the government, and the UK government, I'm not sure how procurement law works, but every government ends up taking more time to be able to update their processes and their ideas. Let me just show one picture so people could also see this. The NHS deal, again, just showing this real quick, was this is from their website, September 28th. This is when they announced it. So if you can see right there at the bottom, contract award, September 28th. So it's not like we're just all imagining September 28th. The only reason this date is relevant is because their website says, hey, this is when we award the contract. Will we get it or not? I don't know. I think people in the UK government are probably going to go home right now and eventually go to sleep, and maybe they're not announcing it if they haven't done yet. But if they do, then we will know, and we will have an answer soon for Palantir. All right, so that was some of the X stuff in regards to Twitter. We got 12 minutes until the market open. Let's cover a couple of other stories that I thought were pretty interesting. We got to cover this one for a little bit because obviously this is a very big deal. Meta Connect 2023. Meta officially had their conference where they basically disclosed all their new things. They unveiled the Quest 3, Ray-Ban smart glasses, and a lot of Meta AI. Now, look, the TLDR, that's what the Quest 3 looks like. Doesn't look bad. Snapdragon XR2 Gen 2 processing. They partner with Microsoft in a lot of different ways. They partner with Google in a bunch of different areas. Obviously, their Ray-Ban smart glasses has been out for a while. Let me know if you use any of these products. I've never used the Ray-Ban smart glasses. Apparently, you can wear it, and it can take pictures and videos of anything in real time as you're walking around, which is like, yeah, that's pretty cool, but I mean, it's not the most it's not the most interesting thing in the world. The thing that I cared about was Meta AI. So essentially, their large language model, Llama 2, that they've been building for the past couple of years, they are open sourcing that into a chatbot. And that chatbot is going to have a variety of different variations. So as you can see right here, my name is Meta AI. Think of me as assistant, and you can ask it any question you want. So for example, you're asking what mocktail pairs well with an avocado pasta, and then the thing gives you an answer. To me, it's ChatGPT, but it's segmented, diversified ChatGPT. And by the way, speaking of ChatGPT, we have a very unique news article to talk about right after this that involves SoftBank and Apple. It's very interesting. But to conclude on Meta, they're essentially releasing a ton of different consumer segmentations of AI chatbots that can help you in the gym, that can help you for cooking, that can help you with life advice and therapy and all this stuff. I think it's fine. I think it's interesting. I don't think it moves the needle in regards to Meta's position in AI. The only part that I thought was interesting is their integration of the Meta AI, essentially call it ChatGPT, into WhatsApp. Because on WhatsApp, you are constantly in group chats. You can constantly ask questions in those group chats. Like if you're scheduling a dinner, and they showed an example of like, what's the best place to eat in Italy, in downtown Italy or something. And like everyone in the group chat like sees the AI answer and then they can decide. So there's a lot of practical use cases, I think, embedded within WhatsApp, not because of the technology, but because WhatsApp has like 22,000 messages sent every minute. So like there's a lot of usage and distribution on WhatsApp, which facilitates the ability for an AI bot to be interesting. But in terms of them trying to compete with ChatGPT, I don't think that's interesting because ChatGPT is already there. So it's not like Meta, the models are a commodity. It's not like Meta's AI chatbots are going to be that much more exciting than anything ChatGPT puts out, or that anything Google Bard has put out. But the integration of that within WhatsApp and things of that nature, I thought that would be super interesting. The Meta Quest 3 is $500. That looks pretty interesting. It's definitely more cheaper than Apple's $3,500, device. And I think there's definitely a lot of use cases for it. Gaming was the big use case that they focused on yesterday. So if that's the case, then there's likely going to be, some practical application there as well. Crossroads, I saw this. We covered it just 10 minutes ago. Fox Club deciding to pause their social media channels. Really unique for why they are deciding to do that. Okay, so that was the update on Meta. Let's move on to a really interesting piece of news that we found out this morning. This has been going around the rumor mill around OpenAI's potential iPhone competitor. So OpenAI is in talks to raise over $1 billion. Granted, the company's already worth about 80 to 90 billion, and they were trying to sell secondary shares on the private market just 2 days ago to investors who wanted to buy shares. Employees were going to offload their shares. From SoftBank, our good friends that own 91% of ARM, to build an AI iPhone competitor. OpenAI is partnered with Johnny Ive. This is actually true. Johnny Ives, I'll show you guys his picture in a second, but you probably remember him. This is the man who designed the original iPhone, iPad, iPod, and iMac. He was Steve Jobs' right-hand guy from 2004 to 2007. He was the main guy that architected what the designs look like. If you haven't seen him before, I'm sure you'll remember him here. He's done. You've probably seen those Apple iPhone introduction videos where they have the white background and they have all the like executives kind of talk about how they architected the new phone. There's been so many spoofs of that on YouTube. This is the guy. He left Apple a couple years ago to do his own stuff. So he supposedly is partnering with OpenAI to potentially build an iPhone AI competitor. Now, why is this interesting? The reason this is really, really interesting is because ChatGPT just unveiled that you can now speak to it in order to get results. All of us have kind of been theorizing that talking or typing into a chatbot isn't the most natural way to be able to get results. It's definitely useful, definitely helpful. People use it. I use it every day. But speaking to some type of input device, Carlos has been talking to this a lot on Finance Junkies as well, that has a fundamentally new paradigm for how it interacts with giving answers in regards to AI. That's where the unique market opportunity can really be in terms of challenging the existing devices we have today. Everyone thinks it's VR, it's the Vision Pro. What if it's not the Vision Pro? What if it's a new type of device that is fundamentally controlled through audio, not through touch, right? The touchscreen was a big revolution for all of us. What if audio is the next big revolution in terms of how we engage with something? And instead of typing, how do I find a dress for this birthday party? You just say it and you get the answer immediately. You would have to really re-architect what a device like that looks like. And it would have to be consumer friendly. It would have to fit in everyone's hands or ears or face, whatever it may be. And it would need billions of dollars of funding because the R&D needed to do that and integrate an actual consumer device into the software would not be an easy thing to do. So it would be super interesting if OpenAI actually gets into serious discussions to be able to come up with something like that. The other thing here is Microsoft can bankroll a lot of the hardware manufacturing. Remember, Microsoft has this fantasy of coming up with a iPhone competitor, right? They tried to create their Microsoft phone, never really happened. The Microsoft phone was honestly trash and no one used it, and it just wasn't a good consumer product. At the end of the day, if Microsoft sees OpenAI software as the new technological moat to integrate AI into a consumer device that actually can scale to billions of people, I would bet Satya Nadella is willing to put up $20 billion at least to try to fund it off the bets that it might work. If Zuckerberg could lose $50 billion on the metaverse, I think Satya Nadella, the fact that he's 9x'd Microsoft in the past 7 years, I think 7x Microsoft in the past 9 years, he would definitely be willing, and I think shareholders would let him take that much of a bet. Now, would it work? I don't know. Apple's iPhone is like supreme. It is the consumer device of a lifetime. But if anyone was going to challenge them, I think Microsoft would try. And they would try to bring Apple to the dance as they're trying to bring Google to the dance as well. All right, it is 9:25 a.m. We have 5 minutes until the market open. So the ARK interview apparently just launched with Shyam Sankar. I did want to react live to that. So let's see. I'm not going to react to it right now during the market open. Either I'll do a separate video or we'll do an extension of the market open at around 10 o'clock and we'll react to that interview. So we'll see. At 10 o'clock, if you guys want to react to that, then we'll listen to that at 10 o'clock after the market open is over. And we'll just stay here and we'll react to Shyam Sankar and Cathie Wood. Shyam Sankar, this is why it's a big week in the world of Palantir. Shyam Sankar and Cathie Wood have just dropped a podcast on the ARK website. The timing of this was very weird because we were supposed to get the NHS deal today. So it was interesting that they chose to drop it on Thursday out of all days at 10 a.m. after the market is open, or after we're done with the market open. We'll probably stream the interview and cover it live and see what's going on from there. Will this new deal, $250 million, be factored into our next earnings? I'm not sure about that, Michael. It's a really good question. So what he's asking about is Palantir's $250 million. Sachin, thank you for being here in the chat. That $250 million supposedly is going to be annualized at $83.3 million every single year for the next 3 years. So in the next quarter, I think if Palantir wants to recognize some of that revenue, they can. But a lot of times Palantir chooses to recognize revenue a little bit later and just put it in their 10K as recognizable revenue. And if they don't need to recognize it, for example, to hit their numbers, then I don't think they're going to recognize it because, for example, Palantir says they're going to do $555 million of revenue next quarter. Let's say they beat and they do 558. That's awesome. If you add another $21 million and they do $580 million of revenue, which this would be $21 million a quarter for the next 12 quarters if you quarterly break it up, the $250 million deal. The problem is they would now have to break $580 million on the next quarter, right? You can't show declining growth. So I think sometimes these public companies decide, hey, let's not recognize this revenue now. We'll recognize it next year. Let's keep our growth the way it is because investors have been okay with our growth, even if it's not amazing. And eventually, we'll show larger growth by showing the annualized revenues a little bit later. So I do think that it's probably not going to factor in too heavily into our next earnings. And then we'll see. Prima Plaza says the Palantir media push is on up from here, baby. Yeah, it's been an exciting week for Palantir at $15.15. This is why, someone left a comment on YouTube yesterday saying, can I just ask you a question? I don't mean to sound arrogant or mean, but why are you so obsessed with Palantir? And I could have given a very Karp-esque philosophical answer about Western democracy, freedom, all this stuff. But honestly, my answer was, dude, it's the most exciting company in the world. I mean, it's just cool. There's Tesla and there's Palantir. If you're gonna be a news reporter in the context of stocks and I love talking about all this stuff, you got to have a main focus. Every news reporter has their beat. If you cover sports, you're probably talking about everything. But if you're covering the New York Knicks, you're covering the New York Knicks. If you're covering the Milwaukee Bucks, you're covering the Milwaukee Bucks. By the way, did you guys see that Damian Lillard trade yesterday? I don't keep up with basketball anymore, but that trade was insane. So you focus on one thing you cover, right? If you're in the sports media business, you focus on one thing and then you eventually branch out to other subjects. But that one thing is your bread and butter. To me, Palantir is my bread and butter because the more I go into it, the more I look into this company, I just see the potential to be grandiose beyond my wildest imaginations. Does that result in 20x, 30x returns? I have no idea. And I would be lying if I said I think it can get there because the stock market is irrational. I have no clue. But the company is interesting. And right now at this stage of covering the stock, it's important to cover the company because eventually the stock will be a byproduct of the company doing what they need to do. Sachin says revenue can't be booked unless work is conducted and recognized by clients. Until that, it's only account receivable. So that's a good answer as well. $250 million probably is not going to come on our books anytime this year, but will likely come up in 2024. All right, we got 30 seconds until the market open. Let's see what's going to happen. The real big issue to watch out for today's market open is the fact that bond yields on the 10-year are at their highest level since 2007. We thought 4.4 was the bottom or the top. It went to 4.6. Now we'll see how the equity markets react in 12 seconds to bond yields being at their highest levels. Mortgage rates also went up a little bit today to 8.1%. Jobs report was okay. Bond yields are tough. Let's see how the equity markets react. It is September 28th, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Exciting day in the markets. Let's see what we have. We have the S&P 500 starting off at $425.38, down 0.16%. Not a horrible open for the S&P. Palantir opens up 1.55%, $15.10. It's up 8% in the past 2 days, not bad at all. Either someone knows something or this is kind of a FOMO rally. We'll see what happens. We'll see if it sells. We'll see if it continues to pile in. Tesla, 239. Tesla falling into the 230s now after a downgrade by Deutsche Bank yesterday to 285 from 300. Coinbase at 71. SLG at 35. Instacart, $28.46, officially $3 below their opening IPO price. If you got Instacart at $31 and you're in a lockup period and you can't sell, you are a little bit underwater on those shares. MicroStrategy at 317. Disney, $80. SoFi down a little bit, 758.33% down in the market open. Amazon at 123. Amazon's down about 2%. The FTC lawsuit has been bad on them in terms of the stock, but a lot of people that I've been talking to have said that this, if they did have to break up and AWS and Prime has to be their own services, it's actually not the worst thing in the world for the company if they have to break it up. Obviously, they don't want to break up, but FTC lawsuit definitely weighing down on Amazon. Netflix at 373, Arc Innovation at 3853, NASDAQ 13,044. We are seeing the NASDAQ open 47 points below what it opened up on yesterday. NASDAQ not falling to the 12,000 range yet. If bond yields get to around 4.7, 4.8, you can definitely expect the NASDAQ to be in the 12,800, 12,900 range, and probably the S&P in the 410 range. We'll see if that happens, but right now we're at 13,046, 46 points away from the 12,000 level. Remember, the top of the NASDAQ in November 2021 was 16,000. Google, 131. Enphase continuing to be green at 120. I don't know if management is doing buybacks or it's just the market is done with selling off Enphase, but Enphase continuously stays green on some of these red days. It had a low of 116 and it bounced right back up to that $120 range of support. Square has people crying, a lot of shareholders crying. I do not understand why Square, well, I do understand why Square is this red. I think number one, their stock-based compensation is insane. Number two, Jack Dorsey doesn't seem like he cares that much about shareholders. And number three, they haven't really been showing progress in regards to overall growth from either the Bitcoin side of their business, which is why they named themselves Block, or the P2P merchants side. Now, Cash App is doing phenomenal for Square. Great product. I think it did almost $1 billion of revenue last quarter. But outside of that, the company is struggling. Square hitting its 52-week lows at below its 52-week lows now at $43.56. This is a tough one if you're in it. Hindenburg, if they kept their short, they probably made money. I don't think they kept their short. They shorted at 77, had some stupid arguments to short it, but nonetheless, Square has fallen off pretty dramatically. Meta at 297. Meta doing pretty well after its Meta Connect. They fell to 284 yesterday. I think when they played the Snoop Dogg version of their AI bot, which I thought was ridiculous that they're trying to incorporate celebrities into their AI bot. I thought it was kind of dumb. I think that's when the market was like, no. This sucks. We're not playing this game. You better get rid of this stuff off the stage. And then eventually they introduced the more serious stuff and the stock came back to normal. Bank of America, JP Morgan, all are up. PayPal, $57.50. I want to share a little video from the PayPal CEO in a couple minutes as well of him talking about how he's going to transform the company. So PayPal CEO did release a video last night talking about what's going to happen with the company. Robinhood at 956, Nvidia at 422, Roku 67, Zoom 66, Target 110. Target closing down another 9 stores because too many people have been stealing and looting from those stores. So Target having to shut down some stores. Robinhood at 958, KRE Regional Banking Fund at 4113. TFC up a little bit at 0.5%. QQQ at 353, down from 355 yesterday. And Bitcoin at 26,518. Wow. Look at Apple. Wow. 168. Oh my. I have not seen. When's the last time? Hold on. Let's look at the chart. When's the last time you saw 160s on Apple? Whoa. Hold on. Let's look at this. Actually, let me open up the Google chart. That'll be a little bit easier to look at that. Wow. What caused Apple to drop today? It was had a little bit of support, I thought, at 172-ish. Here we go. Apple. Let's look at the 1 year. So last time Apple was at 168. 168. When was that? 168. We are looking at, here we go, April 19th. April 20th, 420, ironically. April 20th was when we saw 168, April 27th, April 26th. So around that April timeframe, once we are back down to April levels in September. This is unbelievable. And we hit a high of 189 on September 5th. 195 on July 31st. That was when they had their Vision Pro event. That's tough to swallow for Apple shareholders. That's very tough to swallow for Apple shareholders. Seeing it down there. Reports of the new phone overheating. I actually saw this. I'm getting my new phone in about a week. I did hear that the phone is overheating. I bought a MacBook back in 2020. MacBook Pro, top of the line model, or like second to top of the line model. And I returned it for a Windows, the same laptop I'm using right now, because I would open up 3 tabs and it would overheat. And maybe my Mac was defunct. Maybe I got a bad factory model. 3 tabs. I opened up Google Chrome, this tab, the other tab, it would overheat. I was like, you know what? I'm going back to Windows. And then I got this NVIDIA computer. I paid $1,600 for it. So it's a little bit more expensive than the MacBook Pro. And it's been perfect for 2 years. And I do a lot of stuff on this computer. So I've never been a fan of Macs, unfortunately. And maybe I just got a bad model, but not been a fan of Macs. They've never been well for me. I hope the iPhone is not going to heat up as aggressively as some people say. Let's take a look at PayPal for those that are owning PayPal stock. This is the new leader, Alex Chris, giving an interview, not an interview, a little 3-minute spiel last night for why he is investing in PayPal. And then we'll move on from there. To access this video, I'm going to go to my man Crossroads account, because I know he has all the updates on PayPal. So if you're not following PayPal, I would highly recommend, or not following him, I would highly recommend to follow him. Here we go. So here's Alex Chris. Let's see what he has to say. I've never heard the guy talk, speaking about how he's going to change everything around PayPal. And again, Crossroads, thank you for this video.
Hey team, I made it. It is day 1. Look, I'm official. They gave me a real badge. I am here and ready to get started. I am so excited to be here with you all. Right now, I am actually not in San Jose. I'm in New York with our board meeting with our board for a couple of days. I'm also going to spend time with some of our customers and bring merchants into the office and spend time in the New York office. I'm so excited to start learning from our customers. And speaking of customers, I've been wearing some of the swag that the team gave me. And I want you all to know.
Okay, did you cringe when he said swag, or did you not cringe? I kind of like it. It's a little cringe, but I kind of like it.
Know how proud you should be, because every time I wear the swag out in public or through an airport, people come up to me and go, oh my God, PayPal. Oh my God, I love PayPal. So you all should be incredibly excited about the opportunity we have, what you're already delivering for customers, and the opportunity ahead of us. So what can you expect over the next few weeks? I have a huge onboarding plan that I'm already kicking off. That onboarding plan is focused on listening. It's going to be listening to you all. So I am talking and doing skip levels with not only my leadership team, but also employees throughout the organization and around the world. I'm talking to our board members. I'm talking to folks external, so thought leaders in the industry, as well as some of our partners and regulators. And I'm talking to as many of our customers as possible so that I can learn from them what are the opportunities ahead of us to continue to impact their lives. The other thing that I'm going to be focused on is galvanizing the leadership team. Any new leader that comes in has to make sure that we have focus and that we are spending our energy on the impact that is most critical for us as we finish this fiscal year and head into FY24. So I'm spending a lot of time with our leadership team, just making sure that we know what are the most critical areas for us to spend our time. My ask for you, as we think about going into the end of this fiscal year, is stay focused. Our customers need us now more than ever. We're heading into a peak season, and Q4 is going to be incredibly important for all of us to stay focused and end this fiscal year on an incredibly high ramp. Now, in order to do that, you need to be at your very best. And so I'm excited to share with you that October 20th will be a wellness day.
All right, so wellness day, that's fine. Get my options underwater, my guy. I hope you're feeling well. I hope the company's feeling well. I appreciate the whole focus on wellness. My options are underwater. So Alex Chris, I salute to you. You seem like a good guy. If you get the options underwater, I will feel very well. And I think shareholders will make sure you feel very well in your compensation with PayPal stock. But just to make sure this wellness stuff you're talking about actually results in a little bit of upside to the people that trusted in your company at the low. So please, Alex Chris, get the stock underwater. In all seriousness, I got a good vibe from him. I got a good vibe from him. I don't think he was bad. I think he made a lot of sense. I think he seemed excited to be a shareholder and to be excited to be part of this company. And so as a result of that, I think it wasn't bad. I think it made a lot of sense. He was a good CEO in terms of his opening message. And now we'll see if he's actually a good CEO when it comes to execution and being able to figure out some of this stuff. So not bad. Let me know your first impressions. My first impressions were not too bad from him, and hopefully he'll get the job done. Definitely an upgrade from that pile of what we had before. And I don't mean to be mean, but that guy was not accountable to shareholders. He didn't comment publicly on anything. He barely like talked to people. He was whatever that guy's name, Dan Sheldon, whatever. That dude needed to go. So we got a new guy running the ship. Let's just make sure he can do this. You guys are saying why underwater? Remember, I bought spreads on PayPal, and the average I paid was around $7 for those spreads. Those spreads are now $3. So it's a little bit of a 40% decline. It's a little bit down. It's not a big position for me. It's a relatively small position, but it's annoying looking at it that every day. Because when I bought it, I was like, they have $1.9 billion in buybacks. They laid off 2,000 employees. Everything started to make sense. It was in July. The market apparently was at a top at 460. I didn't think the market was at a top at 460, and I stupidly decided, oh, well, that's a great deal. These are leaps, so I think they'll be fine. But I definitely should have been better on timing. That was one where my timing was bad. Now, my timing on buying Palantir this week was not bad. Picked up that sucker at $13, and right now we were at $15.13. Palantir has not given up their gains currently in the stock market. Let's pull up the stock real quick because I think there is some speculation over this NHS deal. If you are just joining, the NHS deal has not been announced. We did get a deal from the NIH for $60 million, which is awesome. We got $60 million from the NIH in the United States, not the NHS deal. And the organization that has been really deciding to hate Palantir, called Foxglove, decided they are quitting social media today. It's just been a whirlwind of updates that were happening today. As you can see right here, $60.9 million for Palantir this morning. That was decided. So we'll see. We'll see what goes on from there. I want to get an update from Dan Ives, who was speaking today. Obviously, Apple hitting some new lows, not 52-week lows, but some new lows at 168. We haven't seen 160 since April. Let's see why he's bullish on mega cap tech in general going into Q4.
Part of the market. The slide that we're seeing from Apple comes from regulatory concerns, actually in China, restrictions over there that might be taking place, but also regulatory concerns here in the U.S. Some thoughts that about 20% of revenue could be impacted with their deal for search with Google. How seriously should investors take this? Do you see this slide continuing? Yesterday, we actually saw Apple dip below 170.
Mm-hmm. Yeah, no doubt. I mean, we're seeing it both, in the EU as well as what we're seeing in the U.S. Look, when it comes to China, they're gaining share in China. I mean, even if you look at the data over the last 24 hours in terms of lead time. So I think Bark's been worse than the bite there. I think that's actually going to be a positive for Apple, despite what we see with Huawei. Now, when it comes to the regulatory here, look, we're not concerned about that. I think Bark's going to be worse than bite there. I do think that's going to be a long-term sort of headline risk. But I think as we've seen again in terms of big tech, I think that's really been something that you ultimately, it's a buy into the headlines in terms of how that's ultimately played out.
I mean, but pretty steep decline. I know you're saying it's just a headline risk, but we're talking about 20% of revenue.
Yeah, but I think that's something in terms of when you look at Google search and when you look at the China story. I think China ultimately, that's been the hearts and lungs of the Apple story. And if you look at the share gains, I think that's going to continue. Despite many of the bears calling fire in a crowd.
We'll have to look at the channel checks as we go on with the new iPhone 15. I also want to talk Amazon and the FTC. Is this just headline risk? I mean, this could be a serious.
All right. So Dan's main point about the iPhone, again, is that people are going to use it. Services are going to expand. So that's the reason why you should be bullish on it. I don't know if that's the best argument, but that is his argument. Let's hear his thoughts on Amazon.
Threat to their e-commerce business, claiming monopolistic practices.
Yeah, FTC and Khan, it's sort of the boy that cried wolf. I mean, again, going after big tech. I think the street views this more as a multi-year battle, but I think Amazon's going to come out victorious. I mean, I think when you look at this, I think from a legal perspective, I think many think that there's a lot of flaws here. So I just do not believe that this is going to be ultimately that sort of albatross that hurts Amazon here. Even though FTC and Khan continued black eyes, we saw with Amazon, here. I think we saw it with Microsoft, we saw it with Meta. I think there's just going to be another step.
All right, let's look ahead to Q4.
All right. So I agree with him on the FTC thing with Amazon. I don't think the FTC is going to win the case. I don't think it's a big deal for Amazon. With Apple, I don't know, man. That's pretty wild seeing Apple at 168. I mean, I did not expect the market to crash them that much more. Remember, Apple is 7.3% of the S&P 500. So when Apple falls, the S&P falls, and it's pretty violent. That's why the funniest meme I saw during the Vision Pro event, like the funniest meme I saw was someone basically saying, y'all better hope this Vision Pro takes off because everyone's 401k is dependent on this freaking Vision Pro actually selling. And it's like, it's true, bro. Like people who invest in a 401k, they don't know where their money's going into. Their money's going into the market. The market is Apple. The market is Google. The market is Meta. So when these companies go bad, like everyone suffers. Like we have an obligation to make sure these companies do not fail. You talk about too big to fail in the context of auto. If the tech companies fail, look at every single ETF, what they're concentrated in. Every fund manager that really doesn't know what they're doing, they buy big tech. That's the reason Cathie's different, because she doesn't buy big tech. And her returns have kind of sucked because big tech is really good because they're big and they're great at tech. So when Apple goes down, it's not the best for the market at all. Let's check on the S&P 500. Apple at 168, S&P at 425, down 0.15. NASDAQ, let's take a look at them. 13,052, up a little bit. Banks are a little green. PayPal's a little green. Some of tech is green. You got Apple that's red, and some big tech is red. And Palantir just holding on, up 1.85% at $15.13. Not bad at all for Palantir. Okay. I think that's pretty much all the news. I'm going to stay on and we're going to cover the Palantir podcast. I'm looking at all the updates I had to go through, and that's pretty much all the stuff that was needed to be said in the macro. Let me know if you want to watch the Palantir podcast with Cathie Wood live right now. We're not going to be watching it. We're going to be listening to it. It just came out. We will be live streaming the whole thing. I was going to do this anyway, so I might as well just do this on the market open. And we'll be listening. It's about 55 minutes of Cathie Wood speaking to Shyam Sankar, the CTO of Palantir. So this is a really interesting one. I'm going to be listening to every single word. I might stop it a little bit in between to give my thoughts, but for most of it, I'm just going to be letting it play. And we'll see what Cathie has had to say. We'll see what Shyam had to say. We'll see if there's any unique updates. This is a really interesting. I haven't heard Cathie talk to anyone from Palantir ever. She's talked about Palantir for a long time. She's never spoken to someone from Palantir. Everyone says yes. All right, here we go. Cathie Wood, CEO and founder of ARK Invest, $7 billion assets under management, is going to be discussing orchestrating enterprises and data and AI with Palantir CTO Shyam Sankar. Let's see what she has to say. And yes, Justin, I will try to time stamp it as well, so that in the afterwards, when I upload it, you guys will be able to listen to it. All right, here we go. Here's the podcast. We're taking a look, and let's start this bad boy and see what Cathie had to say.
Welcome to FYI, the 4-year innovation. To learn more, visit
Innovators or products by ARK.
Hello, everyone. Shyam, thanks for joining.
Yeah, thanks for having me.
I think it'd be great to start off just to give our audience, our listeners, a little bit of your background and how you really found Palantir and how you've seen the company change over time. Because I think if my research is right, you were the 13th employee at the company and have been there for quite some time. So I'm sure you've seen a lot over the company's life.
Yeah, I joined Palantir 18 years ago, roughly as the 13th employee, and really the first person who built out the team that subsequently became known as the Forward Deployed Engineering Team. So working with customers in the field to really almost solve through back propagation what the product ought to be based on the empirical truth of what the problems were that they were facing and the answers that they needed. But I came to Palantir because of the mission. You know, I grew up as a child, essentially, of refugees. We fled violence in Nigeria, and I was raised with the immense gratitude of understanding the counterfactual every single day of how lucky I was to be in this country. My uncle was the victim of the 13 coordinated train bombings in Mumbai in 2006. And so I could think of nothing more impactful and important than working on problems related to national security in some way, shape, or form. Of course, the business has grown to be something much bigger than that, but I think that the fundamental driving ambition of solving problems that matter, understanding that the technology we're building has an impact on society, so you should own that and think about that in a normative way, has always been there as we scaled the business from government to commercial and beyond.
I was just going to ask quickly, Frank, Shyam, I remember first hearing about Palantir and the way it was described to me or us at ARK, it might have been my prior life, but it almost sounded consultant-like to me when we first. And then I looked at your gross margins and I said, this is no consultant. But I still think that misperception is there. I don't know if you find that when people are trying to explain what Palantir is and what you do. Can you talk about that misperception and how you are able to help people understand what exactly you're doing?
Yeah, it's a great question. And certainly, I think one of the most common misperceptions of the company. And I think a lot of it is how we present ourselves in terms of our product development strategy. Now that the term is much more often copied by other companies for deployed engineering. But the concept of that was really like, what is the likelihood that, sitting in Palo Alto, eating blueberries, we're going to think of the exact problem that our customers have in these very specific domains? Like, what is our access to truth? Is it here in headquarters, or is it out there in the field? And what is our product development methodology going to be as a consequence of that? And our idea was that we actually need to go walk not just a mile, but many miles in the shoes of our customers to understand not only what their problems are, but the deeper secrets that, in some sense, their current problem is symptomatic of. And then go solve that root issue. And so there's a process of both discovery and product development in doing so. And I think the conceptual metaphor you can think about that is actually, how do you train a neural network? You start with the answer, and you back solve, you back propagate to train the function. So similarly, how do we develop our product? We go figure out what are the deep, fundamental, unsolved problems that exist out there in the field, and then work backwards to the solutions around that. And I think that's also given us a sustainable edge in how we do R&D. You can kind of think about it as the set of things that are discoverable sitting comfortably in headquarters have been discovered. But as fancy as your ERP system is, when I go to the front lines of these factory floors, they're running on Excel. So if the ERP system works, why are they running on Excel? And who's spending their time thinking about that question? And can you go solve that? Can you build the product that addresses those issues? And so, absolutely, I guess this is a long way of saying we can present like a consulting company, but we're not billing for hours. The model is not actually services. The model is to go figure out the profound problems that affect our customers. And you can see that in the early way in which we went to market, which was like, really, people would call us with a problem to solve. Tom Enders needed to fix the A350 ramp in the initial production, right? He's not a technology buyer. He has a really profound business problem that needs to be solved. How do I get my ramp back on track? I was supposed to produce 50 planes in my first year of production. I'm on track to produce 16. I've got 6 months left to go in the year. And certainly, now you have to go say, well, how do I go sit at the final assembly line in Toulouse? How do I go understand what's going on in Saint-Nazaire? How do I pull this all together and understand the parts of this that are technical, that involve data not flowing between institutions? How do I think about this institution as a web of decisions? From the hand of their supplier to the hand of their customer, they're making a bunch of decisions. Those decisions are all connected together. We've organized as a society, we think of these companies, we've broken them down functionally. This is your function, that's your function. Those functional divisions are a manifestation of how we're dealing with complexity. Well, no one person could make all of these decisions. But actually, software can really help you do that. It can help you understand, when I'm making one decision close to my supplier, how does it affect the customer? When I make these decisions, what options am I losing? What options am I gaining in terms of how I can deal with this problem? To make that less abstract, a kind of a simple example that's real, if my procurement person is incentivized based on the KPI of raw material costs, and my production person is incentivized on yield, you have a problem where the procurement person might be buying the cheapest possible good that has a lower net yield than a more expensive raw material. And this is the sort of canonical problem, if you play it out over a more complicated value chain, where it's not only that the left hand doesn't know what the right hand's doing, the left hand is actively hurting the right hand. And so how do you connect these decisions up so that your company can be better?
Thinking about that approach that is so kind of tailored to the specific problem that your end customer has, and working backwards to solve it, how do you still take those learnings and evolve kind of your core product and platform? So you've kind of like, I assume, accumulated this knowledge and baked it into the core product that you're bringing, so you're not reinventing the wheel all the time. How do you make it extensible and kind of more of a platform than it is a point solution?
Which your gross margins would suggest that you have.
Exactly. I mean, that's the art of it, right? I wish there was some
really good question here. So they asked about the consulting stuff. Shyam cleared it up. He had a great answer. Now they're saying, all right, you have gross margins of a software company. How do you prove to the market you're an actual software company by turning into a platform, not just a niche consultant player?
Science to do that, but actually, when you engineers, so we kind of like to think in abstractions. We like to look at the problem, think about the primitives. How does what I'm solving here apply to other problems elsewhere? And that is the art of of product development in this context. But a very real example, like the work that we did to power Operation Warp Speed, the US and actually even the UK's COVID response, that initial work was inspired by what we had done optimizing hydrocarbon production for an oil major. And you can't actually, I think, fully connect the dots prospectively. Like, I didn't know that the work that we were doing in energy was going to be what powered the future of supply chains broadly. But I could say that, hey, solving this really hard problem, doing it in a way that generalizes, has nothing to do with energy. It's really grounded in data and how we ontologize that data. Historically, that's been an excellent bet for us. That is going to be something, first of all, I know it generalizes from a product perspective, and it's going to be the type of problem that other people find immense value in.
So this means you can go, whereas you started with national security, defense, and so forth, you can go into any vertical, is what you're saying, because of these generalizable approaches to solving problems.
Exactly. And that's what we've done. We're now in over 50 different verticals outside of government. And in government, it's not just intelligence, defense, it's also healthcare, it's also tax, it's all the basic functions of a government. And within the private sector, it's everything from energy and mining to financial services and insurance to healthcare and consumer packaged goods. The industries couldn't be more varied, but it's the same platform across all these industries. And that's what we kind of honed. If you go back to the very beginning in national security, I think the cynical way to think about Palantir is that it took something as sexy as James Bond to motivate engineers to work on a problem as boring as data integration. And that was really the first secret that we discovered, which is when we approached the space, we wanted to work on, I would say, sophisticated analytics that helped you find the bad guy. But that approach presupposed that you already had your data integrated.
Mm-hmm.
And if you ask people, they would tell you, yeah, I've spent, $500 million, I've integrated my data, it's here. But if you actually go to that system, you would discover it's not integrated. The real secret is that people were trying to solve data integration as a services problem. I'm going to hire an army of people. I'm going to integrate all of my data. It's going to be in one place, and then the job's done, rather than recognizing fundamentally it was a product problem. Because not only is the volume of data you have growing every single day at an exponential rate, the number of discrete data sources is growing. So every day at the margin, there's more data to integrate that you hadn't conceived of with your services-led approach. So you need a product that was capable of keeping up with the entropy of data in your enterprise. Having solved that problem, now you can do lots of things with it. Now you can actually go on and you've earned the right to do the sophisticated analytics. And the translation for that in the commercial world is agility. Right? When everything was in steady state, people didn't really perceive that they had a problem. You needed something like the A350 ramp up or some sort of event to catalyze that. And I'd say with COVID, everyone, certainly anyone that touched supply chain, experienced a simultaneous shock that got them to really wonder, what over the last 10 years of IT investments, what have I been investing in that actually met its moment when we got shocked? And that was a kind of a sobering realization for a lot of folks.
Gosh, just on the data integration, in speaking with your chief revenue officer, I believe some time ago, he definitely pointed. So you've been doing that from the beginning, which positions you beautifully for what is happening today with generative AI. Are we right on that?
That's exactly right. Now that you have your data ontologized, which itself didn't take a very long time, I would say it was a rewarding exercise to go through, the ability that you can deliver these generative AI use cases, like the speed at which you can do it is phenomenal. I'm thinking about a large European insurance company that built a subrogation claims agent in 2 days on top of the ontologized data asset that they had in our software, or a warranty claims copilot that we built for a US auto manufacturer in less than 2 weeks. On top of their data. So the speed to value there is amazing. And so if you think about the warranty claims copilot, it saves 4 hours a day for their analysts. So half their day is now being reclaimed in a matter of 2 weeks. So the ROI on these things is truly incredible.
How long does it take, sorry, Frank, just to get our bearings here, how long does it take? I know it depends on the size of the organization, but how monstrous of a task is integrating all the data in, let's say, a decent sized company?
Not as long as you would think. So I think one of the fallacies that's out there is really this going forward from the data. It's very, very tricky. So if you think, you end up boiling the ocean. So if you're like, look, I need to get my data house in order first before I can do anything, you will find that you never get your data house in order. Or to the extent you do, you might be kind of tricking yourself into thinking the job is done. The approach that we've seen be highly successful is working backwards from the decisions. So the kind of internal mantra we have is decisions, not data. Let's focus on the decisions that matter to this institution. Now, from there, I can tell you what data can I bring to this decision that helps you make a better decision today and get into a learning loop tomorrow. No decision happens in isolation. So now I can look at the decision before and after that, and I can ask the same question. What data is involved with that decision? Now, this gives you a very clear priority function to go after building that ontologized data asset where every single day, literally, you're making money doing it. So it's rewarding. You can stay motivated through it. It's not some sort of, hey, just trust me. I got to eat these vegetables for 2 years, and then I promise you money falls from the ceiling, which never really seems to happen. But look, every day I can validate that I'm on the path, and the incremental work we're putting in has ROI from the business. And even more importantly than that, I'm learning. I'm learning about how we as an institution get better. And so that also catalyzes the very productive and generative relationship between tech and the business, which historically sometimes gets broken because the time horizons for delivery are very different. Business wants to know, what can you do for me today? And tech's like, look, if you only had a long-term view and invested in this, give me 2 years. I promise I can deliver the world for you. And regardless of which one is correct, how do we solve this mismatch? We find something, there's common ground, and that I can deliver for you today and I can deliver for you tomorrow.
So if we unpack that a little bit more, kind of starting decision first, then finding the right data to plug into it. You mentioned ontology a few times. What does that really mean, and how does that approach differ from maybe data warehousing or aggregating data in some other way? How is that ontological worldview shaped how you've built products at Palantir and led to, if I'm interpreting this right, a quick also how that sets up companies to action and deploy AI more effectively than other approaches?
Absolutely. So we think of the ontology as kind of the nouns and verbs of your business. It's not just the data model, which you could say roughly are the nouns, but also the actions that can happen. And so the ontology is this operating system layer that orchestrates your enterprise. So if I want to allocate inventory, I need the noun of the inventory, the parts, et cetera, the model for that. But even more importantly, probably an ERP system is my system of record for that. So I need the verbs. I need the ability to actually reach into that system and allocate the inventory. That's where it's going to happen. So now scale that out to all the transactional systems I have in the enterprise. So I have a model of the enterprise that represents how I as humans think about my business, not how that transactional system's schema happens to have been structured. My view of inventory might actually be informed from tens of different systems. So I have some sort of canonical way of seeing it as one thing. And then I have a single place I can go to actually permute that, to take action on it, whether I'm allocating it, reallocating it, assigning it, moving it into production, reassigning the customer orders, all the things I might want to do to it. I don't need to know I do that in this system or this system. It can't be done. Actually, I'm pulling it all together. So if you have that scaffolding, suddenly when you're analyzing something, you're able to go beyond dashboards to applications, because I can make decisions in the same pane of glass that I was otherwise generating insights in. That's where now you can apply AI to this. Okay, well, how was I analyzing it? Now I have a canvas across which I can bring the latest AI and actually very cleanly tie this to an action that changes how my business runs today. And all this is happening in the framework that gives me a continuous learning loop, right? We think of data not as exhaust, but as fuel. So all these decisions I'm making are being captured. I can see them in the context of the value chain. I can reflect on which ones were good decisions or bad decisions. I can make different decisions as my priority function changes. Maybe one day I'm interested in maximizing revenue. Another day I'm interested in preserving market share. Another day I'm interested in profit. Like my objective function, that's going to come as a function of the strategy from the C-suite. How do I tie my strategy to my operations that informs the decisions we actually make through that value chain? That's the value of the ontology.
And I think a key part there is the ability to actually take action on it. You can't just read the data and get analytics and maybe even make predictions. Or that's all great, but if you can't take action on it, then you can't actually move along a process within the organization to actually get to that end result that you're looking for. And I think that's what's unique about the Foundry or generally your approach.
I think that's right. One CEO I know said, I want to be better, not just smarter. Right. And in fact, he would have rather been better and not smarter, just kind of showing you the latent frustration he felt on not being able to take action on really clever insights.
And I think it naturally leads into like how you can help companies deploy generative AI, where everybody can look at the success of ChatGPT and how profoundly capable it seems at first when you're asking it questions and it's responding like it's an expert, and it can draft a newsletter for you, help you create a marketing campaign. But then how do you actually plug that into a process in an organization and take it beyond just this kind of like chat window? What does kind of operationalizing AI really look like?
And just to add on to that, did this shift towards large language models interrupt your business in any way, or you were anticipating it and, welcome to the breakthroughs?
This is a really interesting question. So let's see how Shyam sort of embraces LLMs and how he discusses potentially how AIP is now changing their business.
I'd say we always view the ontology as something very important, as a key strategic differentiator. It existed in the first version of Gotham, this notion of the dynamic ontology back in 2003, 2004. I think we were pleasantly surprised to see how much the world we had been building for met its moment with LLMs. It's like, wow, you actually cannot unleash the value of an LLM without these things. That's been our observation and why we've been able to move so fast. And maybe even to just take a step back to a lot of the stuff that you were saying, Frank, I would say it interrupted us in the sense that, by January, it was quite obvious that we needed to tear up all our roadmaps and get excited about how we could incorporate LLMs into our software to provide a whole new series of experiences, given where the technology had gotten to. And that we'd be positioned to do that because of ontology. So to take a step back and kind of think about what is the LLM doing? Because of course, chat has captured everyone's imagination, but I might go so far as to say, I think chat is kind of an anti-pattern, or at least certainly limiting in terms of the value that you can unlock from LLMs. And we could kind of say well, what is the LLM doing? I think it's actually really hard to say what it's doing, but I can tell you what it's not doing. It's not doing human thought, and it's not doing algorithmic reasoning. It's some sort of third type of compute that is some middle ground between these things. And when we look at it, certainly through a chat interface, it's very easy for people to think it's doing human thought because it speaks in the form that we'd previously known most human thought through, natural language, but it also doesn't really know what it's saying. And on the other extreme, it's clearly not capable of algorithmic reasoning, a form of execution so precise that if the same thing didn't happen every single time, you would call that a bug. But it does seem to be instructable in ordinary prose. And so the kind of conclusion we've come through working through this is that all of the value comes from an elegant integration of human thought, algorithmic reasoning, and the LLM. And that's kind of the pattern. So when we think about AIP and what we've built here is how do I bring that to my customer? And to make that concrete, LLMs need tools. We all understand they can't do math. You take 5 LLMs, you ask it to multiply 5-digit numbers, each one will give you a different answer. You can say that's an LLM hard problem, but they don't need to. Orbital simulation, inventory reallocation, linear programming. We have tools that do these things. You need a tool bench or a tool factory to make new tools that gives you an easy scaffolding to pass these to the LLM to use and execute. All of the value in actually using these things, I think, comes from the application layer, which I think when you look at the market, you can see the people who've jumped on this fastest own the pixels at the application layer. And how do you bring the experiences to that? I think the reason that chat is also a limiting interface is it pushes us to expect the models to be domain experts. And if you go down that route, and you'll spend all your time thinking about how do I train a new foundational model? How do I fine tune models? And I'm not saying that there's a place for that, and we can get to that. But I think that gets you to undervalue is the parametric knowledge of the model. It's not useful for your domain, as in what does the model know? More importantly than getting the model to speak English, which of course it does quite well, actually I think a lot of the value rests in getting it to speak code. And if you will allow me the colloquialism, to speak clicks, to speak a JSON or a DSL that represents your application state. So how do I take the current application state, the intent of the user, maybe with no prompt, and generate the future application state from that? They are very good at this. Yeah, and that's, I think, the secret of driving these experiences.
Is there a world where the model gets so good at talking to these applications that you can actually, even though pixels are important and the tools that have kind of this front end distribution, like I'm thinking of Photoshop, all of a sudden you can do really interesting and creative things in it. Is there a world where those types of UIs actually get displaced because the models get so good with a simple natural language input?
I think that world could exist. I think that it's much more likely. So if you think about like how our experience iterating with these things is that actually the LLM is a great way of accomplishing the first 95% of the workflow. And that you're going to want the escape hatch of being able to do the last 5% with a few clicks here or there in a canvas that you understand pretty well versus having to reattack it and try to explain what you're trying to do one more time through it. And that's a way in which I think the advantage accretes to the incumbents who own those pixels today. I do think, though, there's an opportunity for people who own the application space to integrate with other products in completely new ways. You could say, like, at the limit, conceptually, the LLM now means that the capabilities of your software are defined by the quality of your backend APIs and how strongly typed and type safe your data model is. The more that these things have excellent capability, the more you can actually rely on the LLM to get right. You could actually define your UI at runtime and have a fair degree of confidence that it's going to do exactly what you want based on the fact that your APIs are robust and cover the breadth of your ecosystem, and your data model allows you to validate the correctness of what's actually going on here. And that's what we've seen, that we've been bringing these generative experiences to the Defense Department in an application called Gaia that's used for mission planning. And so the ability, Gaia has maybe a decade of tools built into it. How do I do route planning? How do I do line of sight analysis? How to do course of action generation? How do I look at the enemy's most dangerous course of action, most likely course of action? All of these things that I'd say in some way we've been able to do algorithmically. Now, how do I take those tools and give it to the LLM so when the user is trying to ask a question like, I have to plan for Dunkirk. How do I find every cargo ship that's over 150 meters that's in this vicinity and build an operation around that actually 1 or 2 sentences replaces what would have been maybe 50 clicks. 1 or 2 minutes replaces what would have been 1 or 2 hours. And in those sorts of contexts, I think that's everything. Then extending that metaphor, how do I think about how my application can interact with other backend systems? Instead of having to get you to go to another UI or thinking about how do I integrate those UIs, actually, I can be coordinating this through the LLM and the backend by manifesting those other systems as tools for the LLM.
You brought up an interesting thought or question, I guess, in my mind, which is that, the commercial world, which we pay a lot of attention to, is kind of going nuts for generative AI right now. And everybody's fighting to get their latest NVIDIA H100 so they can train models or deploy models, experiment in many different ways. How is the government reacting to, and how government agencies are reacting to generative AI, and how quick are they moving on it?
I think there's a lot of excitement there.
Okay, this question is also really important because Palantir just got $310 million from the government this week. So I am really curious to see how Shyam Sankar talks about the integration of AI into the government and where he sees the future of that potentially going for Palantir.
There's been a number of strategic investments at the top level in the Defense Department. I think there's also caution. How do we use these things for things they're actually going to be good at? I think some of that caution is very well founded given the stakes. And I'd say in my own experience, commercial and government, across the spectrum, there are good use cases and there are not so great use cases where maybe the limitations, I shouldn't even say limitations, but the nature of the technology is not understood. And maybe to unpack that for a second here, one of the things that's magical about LLMs and why I think they're kind of this third type of compute is that they're statistics, not calculus. And if you're modeling it as calculus, you're going to find it, you might end up misapplying it. And so a more relatable metaphor for this might be predicting an eclipse versus predicting the weather. And when we first started predicting the weather, I think in the roughly mid-1800s, we thought it was going to be like astronomy, like predicting an eclipse. Like I can tell you when the next eclipse is going to happen 200 years from now down to the second, because it's dominated by the correctness of the calculus. The weather is stochastic. It's dominated by the error that propagates as you're solving these equations. An LLM, it's kind of got that flavor to it. It's actually stochastic. And so how you're going to harness that stochastic genie needs to be thought through carefully. And in particular, I think what makes it hard is that code, kind of the entire ecosystem of software development. We've grown up in a deterministic world. We're used to writing test cases, how we plan for code, how we think about what it's going to do deterministically. And now when you introduce even one stochastic variable into what was otherwise a deterministic system, the whole thing is stochastic now. So there's a big part of the tool chain that engineers need to rethink, and kind of even more than that, I think probably an intuition of where the value lies and how to use these things that engineers need to rethink as they go through it. And that, I think, is where the caution is well warranted. Now, on the other hand, my consistent experience with this has been it is truly empirical. You cannot think your way through where the value is going to be or how to use these LLMs. You have to get in there, roll up your sleeves, and attack the use cases. Now, I think on the other hand, that's very exciting, certainly as a practitioner. But it kind of speaks to, go in eyes wide open, understand and be cautious about it. Understand you're dealing with something that is statistical and not calculus, but then get busy at going after the value.
Can I ask you, we're trying to figure out, many people in our business are scared that we've entered another tech and telecom bubble, a repeat. That's not our belief, but I do think when there's such a rush of capital into a new idea or into a breakthrough, that there are inefficiencies and mistakes. You're suggesting that this is true. So what is your, and I'm sure you've had experience with your own clients, are they still pushing full throttle, or are they saying, wait a minute, we need to think about this a little differently. We may not understand what this is, much in the way you've just described. What's going on out there?
I'd say for every institution, you have a little bit of both going on. Probably it leans towards momentum. I should say maybe a lot of momentum and a little bit of caution. And we've been really thinking about how do we help our customers understand how to think about these things differently. Like, where are the risks? Where is it quite safe? One of the most effective techniques for us, to the point of this journey being truly empirical, is that we've been organizing these boot camps. We go city by city. We've done one in Chicago, one in Tokyo. We get 10 to 20 customers together. They spend a week building a production application. So they are going to leave that week having shown their peers what they built and having shown themselves that in a week they can build a production application using this technology. The most important part of that journey is not only the power of belief in what they can do, but the intuition over, this is how it's actually going to work. Because it's not going to be a chat interface, realistically. In fact, that's not where the useful production outcomes are going to come from. What does it really look like? What sort of use cases should I go after? And I think one of the common mistakes is when you think, to my earlier kind of dichotomy of algorithmic reasoning or human thought, if you're trying to get the LLM to do either of those two things, it's a safe bet that your use case is going to fail. But if you decomp your problem in a different way, you can get a lot of the value. So to the warranty claims example that I was giving you for an auto manufacturer, what the LLM was doing that was quite magical is reading an unstructured claim coming in from a dealership filing the warranty claim and figuring out which component in the car the claim related to. So that process alone, for the tens of thousands of claims that come in every day, took 4 hours a day per person. But what the value for the auto dealer is taking that data and analyzing and looking at what parts do I need to manage? Where do I need to do recalls? How can I get ahead of this? How can I reduce my cost of quality and cost of warranty and the accruals that come from that? How do I manage my suppliers based on the quality? So how do I take the strategic decisions? How do I leverage the human thought that is so nuanced and so contextual and apply it towards that problem? And how do I use the LLM to do something that otherwise was actually just getting in the way of unlocking that value? So for all these use cases I look at, I think there's quite a bit of art in decomping that elegant integration between human, LLM, and algorithms.
I'm just picking up on the word art. I might be wrong on this, but I don't associate engineers and art. I could be completely wrong here. It's just maybe I just don't understand. Are they comfortable in this zone? Intuition, art, you're using words that I don't normally associate with engineers, but I could be wrong.
Yeah, I think we could go in a number of directions with that. Well, I think first of all, the methodology of forward deployed engineering means that you're sitting right beside the claim analyst and you really get a sense of what are they doing, what are they not doing, where is the outsized value coming from their human judgment versus where is the software getting in the way of them actually creating value. So that's a piece of it. You're exposed to the customer's art, the customer's craft, if you will, that allows you to model it. But I think even more profoundly, to speak about culture for a second, I think culture of a company is hard to say. In some sense, you have to experience it. But I'd say that the single most important tenet of Palantir that our culture is a symptom of is this idea that Palantir is an artist colony. And that comes straight from Alex Karp himself, that, we're not hiring, for better or worse, most companies are factories. You hire you for this sort of role, you're this sort of cog. If you do this role long enough, here's a ladder you can climb. It's very well defined. You can even see it in our kind of projection of normalized titles at the company. We have all these weird titles for what you are because we don't want you to import preconceived external notions of what your job is. And really, your job is based on who you are. And we are going to go on a journey together to define what you're good at and not good at and build a role that's N of one. It's built for you. And I think a part of that is like, you don't get Dali to be better by saying paint more like Monet. The art is unique to the individual. And so I think this is a place that values craft immensely and tries to tease out in our individuals how they can see, of course, the science and rigorous engineering of what they're doing, but understanding it that it's this sort of dialectic with the art that makes it truly valuable.
Sounds a little like investing. Yes.
Do you, like thinking about inside Palantir and pulling the onion back, do you use these tools and an Ontology, generative AI inside the company?
Absolutely. I mean, we've always dog fooded our own products and, we use them religiously. I think one of the exciting things about generative AI is how quickly we've been able to build our own co-pilots and to go after problems. How do I auto-generate documentation from the things that we're doing? How do I build co-pilots that help us do incident response better? How do I transform the internal operations, the kind of G&A stuff that we're doing? That gives us ideas of new things that we could even be going after. You think about all the video conferences that happen and the audio that's there. So one of the first things that we noticed working with companies like Panasonic Energy North America, they make every battery in the Teslas, co-located with the Gigafactory, was that you have tens of thousands of pages of documentation. How do I maintain equipment? How do I do X, Y, or Z? You go to the Defense Department, you see the same thing. Like they have O plans. So like how do we expect to fight this conflict? Thousands of pages. Or with drug discovery or big pharma, they have statistical analysis plans that they go back and forth with the FDA on, about 1,000-page PDF. So there's this rich human language that you can apply LLMs to do so much. One of the constraints is understanding where is that document actually stale? Who likes writing 1,000-page PDF documents? Who likes reading those things? So once you get into the nitty-gritty and to the point of secrets that are at the front lines, you start realizing like this document was accurate 2 years ago. It doesn't really reflect how the workers believe things are happening today. What does reflect that is every single Slack conversation, every single Jira thread, if you could just somehow record the audio of the incident response meetings they're having, that's where the true knowledge is. Now, that's a feasible problem because you can convert the audio to text. You can start driving that through LLMs. You can auto-generate question and answer pairs. You can fine-tune a model on that if you want. You can start bringing that knowledge to bear in the next operational context and setting. And so I think that it's expanded. In some sense, it's allowed us to kind of feed the iterative feedback loop of data integration. Like the core thing that we believe creates value. It's like, oh, we didn't even realize there are all these data sources out there that were so unstructured before. It wasn't feasible to really integrate them before. They now are. The efficient frontier has been pushed out. I can bring so much more of what was historically viewed as ephemeral knowledge to bear against the problems that we face. And that's what we've been focused on internally as well.
It's interesting as we're in the investment world, we try and figure out, okay, what's going to be commoditized? And, you try to avoid that part of the market. And where is the real value going to be created? And, of course, everyone is checking the box with NVIDIA, right? GPUs and so forth. But the ramifications of what we're talking about are so profound and pervasive. So do you have any thoughts on commoditization? We were thinking about foundation models, commoditized or not. Are the real winners those with the truly proprietary data? And the example you just gave, yes, many people have wondered why we own Zoom. It has incredible data. It's just announced a bunch of AI products, and it's going to have Zoomtopia. So we're just trying to figure out, okay, everyone's a winner from a productivity cost control point of view. But there is going to be some commoditization. How do you?
Yeah, it's an excellent question. I think probably the value accretes at the bottom and the top of the stack. That's my current intuition. So, you're going to need lots of compute to do these things. And then I think the magical experiences are going to come in the application layer. And so I think that the models are going to be squeezed. I think there are probably going to be a few really big winners there, but there's probably not going to be many, many, many winners in that space. And a big part of that is, like, if you don't own the application layer, it's very hard to create the experience. And you see that if you interact with the model companies and you start asking questions like, where's the value? What sort of use cases should I go after? It's really, here's our API. There's not enough opinionation there. And it's not their, how could they have earned the opinion yet? Maybe they'll get there, and I don't want to preclude that, but I think the ones that are being very successful are moving up into the app layer. They realize that they need to own that app layer to really provide the value and be able to capture enough of that value. And I think it also explains, maybe if you just wanted to look at this as an outside observer, the speed at which Amazon, the different approach that Amazon has taken to this than Microsoft. When you really look at, like, where is Microsoft super opinionated and where does the opinion seem magical, it's how are they going to bring these experiences to Office and to the applications they own. And I think Amazon looks at it and says, look, let's just have lots of models running compute because that's how they make money. Right. And that there's no opinion because they don't have the app layer to have an opinion against.
Mm-hmm. That's really interesting too. Who are the sleepers here, do you think? The companies we're probably not thinking about?
I don't know. I think I need a little bit. It's so, the space is so fast evolving, and of course the amount of funding that's coming here is. But I kind of suspect that the value accretes to the incumbents in AI. That you're gonna. This is a and to the extent it doesn't, I think the incumbents were asleep at the wheel. Like the easiest place to go capture incremental value and deliver value for your customers is in the pixels you already have. Ship to those pixels today. Go after it. There's nothing about AI that creates a disruption in distribution. And that's why I think it's going to be very hard for complete new entrants to have a big impact here. They're going to have to find some way of integrating into the value chain.
Right here, Shyam Sankar is 1000% correct. AI has not solved distribution. If you're a Facebook, if you're a Netflix, if you're a YouTube, if you're a Google, you have the world's users. AI has enhanced content creators being able to create on YouTube, but it hasn't enhanced the ability for content creators to get discovered on the ocean that is YouTube. So if you have distribution, I think he's right that incumbents will win. But obviously, if you have some really amazing tech, maybe you can break through against the incumbents.
Interesting, because the productivity benefits should accrue to many, many companies, right?
Certainly, if you just think about it from the vendor side of this. So yeah. I think the folks who have the first crack at this are going to be the ones that own the application layer. We've obviously seen the uptick from NVIDIA because that's going to lead, right? Like, okay, I need the compute to even get to the starting line.
Sure.
Then once you're at the starting line, what's going to happen? And I was with a very senior person in government the other day, and he was just telling me, the more I use ChatGPT, the duller it gets. That's not really a knock on ChatGPT. It's what he's experiencing. It's what I think lots of folks are experiencing, the limits of the parametric knowledge of the model. Yeah, okay, it doesn't know anything after 2021. And, it's okay, so what's the utility I'm really going to get for it? Well, I think what he's really needing, what he's saying is, I need this inside of my applications, the things where I go to do work today. So who's going to be the quickest to do that? So if you're a total disruptor, you got to go build that application, compete head to head on an existing application, and then bring the experience. That absolutely might be possible, certainly for certain wedges of the market that you can grow into. I just think that the first mover advantage is going to rest with the folks who own those pixels today.
Is there anything about existing technology infrastructure, you're mentioning the incumbents, which would limit the efficiency or the effectiveness? There is controversy out there on Microsoft. Is it still so legacy bound that there's going to be something to trip it up for that reason? It's been moving pretty well from what I can see, but just that I'm just throwing that out as an example.
Yeah, if there are, I don't see them yet. I think I wouldn't bet against them as an example with Microsoft, certainly. And I think that in general, the infrastructure is probably not going to be rate limiting. Of course, everyone's having a hard time getting at GPUs, but I also think the amount of movement in open source, particularly from Meta with Llama 2, is creating a whole surface area around which the models are not going to be the constraint.
I guess another way to frame or just react to Cathie's question, there's the infrastructure for deploying and training and doing whatever you want to do with the AI, but there's also the ability to connect it to the rest of your organization and really integrate it rather than just make, a standalone kind of new AI product. 'Cause it's easy to build, modern cloud microservices architecture from scratch. But when you're integrating it into a legacy system that's running on a mainframe somewhere that hasn't been updated in 20 years, it gets a lot more difficult. And there's probably some organizations that are better positioned to move fast, and the incumbents being the large tech companies probably can, but there are other incumbents in other industries that probably are not as well positioned.
That's a great point. And I think it goes back to what I was saying earlier about how robust are your backend APIs and how type safe is your data model. Type safety is your friend with LLMs. It really limits to give you some intuition for that, you could say, like, in some sense, English is like the least type safe language. The number of sentences I can make that are grammatically correct but garbage is probably larger than the space of correct sentences, right? So there's a lot of the risk of hallucination becomes very high. The more type safe your data model is, actually, the more you can safely rely on the LLM kind of filling in the parts of the data model that you need, and it gives you a shortcut to leveraging them and accelerating their deployment in production. So when you
Sorry, can you type safe? This is not a phrase that I have used.
Yeah, sorry. It's a kind of computer science term for, you could say, like, I just have a string of words. Here are words. It's very hard to validate, like, are those words correct? Do they form some sort of structure? You could say that's like the least structured way that I could answer a question for you. On the other extreme, you could have something that's highly ontologized, or here's a precise data model with a hierarchy, and the answer must be provided in this very specific form. It's how I represent the world. Now I can validate that this is a legal or illegal state that can exist. So now when I'm leveraging an LLM and I'm trying to get it to generate the data, I'm not just saying speak a sentence, which actually maybe only a human can validate as being correct or incorrect. I'm saying produce this data structure, which now the computers can validate on their own as being right on or garbage or needing to reattack it and ask the question in a different way, et cetera. And then you can start reliably building. Now it's composable into building blocks that drive your software. And so I think that's where it becomes a prerequisite. So if you've taken shortcuts in how you model your data, too many things are done by convention as opposed to being done explicitly, you're going to find that you're going to first have to fix those things in your data model before you can truly get the value from generative AI. And that's, Cathie, what really speaks to your point of, okay, maybe there are legacy providers, maybe there's software that can't keep up. I would focus on these two dimensions as being the greatest risk, which is, how much of this is kind of sloppily organized between front end and back end APIs. It's not clean enough that the LLM can grab it and get leverage from it. And the other part is how modern is the data model and how specific is it?
And I think, like, the emergence of generative AI and the excitement about it is probably, and the requirement to have this well-documented and enforced data model is probably driving a lot of interest in business towards you with AIP as being an enabler for that it almost, and this goes back kind of way in our conversation, but you've been building towards this type of infrastructure for an organization for a long time. And now generative AI seems like a really good fit for it.
It's a really good point. People used to ask us all the time, like, why do I need an ontology again? And that's always a dangerous place to be in. It's like you're saying, like, look, I'm telling you, this is you have this orchestration layer. Here are reasons. That question has gone away. It's just very obvious when you're trying to build an LLM-backed function. Okay, well, I need a way of orchestrating tools, handling into it. How do I do that? I need a way of it not hallucinating data, but actually using traditional information retrieval techniques to answer this question. And so the value of ontology as a prerequisite to deploy these in production is just become obvious to folks.
So you are have just become chair of the board of Ginkgo, a company we're really interested in, but is not well understood out there. So many companies in the innovation space are not well understood as they're evolving. And in fact, many people, it's kind of
This is going to be a good one. Cathie Wood has over 120 million shares of Ginkgo Bioworks, synthetic biology company, about $4 billion, 1.8 on the stock price, $1.80. Shyam Sankar is on the board. He's the head of the board of Ginkgo Bioworks. Some people are saying Ginkgo Bioworks is like a 20, 30, 100x if synthetic biology plays out and they end up with their business model. Other people are saying it's a scam. Cathie's been buying a lot. Let's see what she asks Shyam about being on the board of Ginkgo.
I don't know what to do with this. It's all kinds of industries and data, and you've got the healthcare world, and they're very precise in terms of what they want to analyze, and this is not it. So just wanted to know how you and Ginkgo became connected, and how you would describe it to someone. You describe things very, very well. We've learned in this podcast how you would describe what Ginkgo is doing.
Yeah, so I just became the chairman of Ginkgo. I've been on the board for 8 years now. And so I've known Jason and Reshma and Barry and Tom and Austin for quite a while. So I probably started getting involved with them when there were about 50 people. And so I've seen the business go from a place where they were really in a zone to help industrial bio manufacturing, like how do we build flavors and fragrances, to a place where now they're helping actually manufacture drugs. And it's been quite exciting. But what's been consistent the whole time is that the mission of Ginkgo is to make biology easier to engineer. And if you kind of squint at it, you can think of a cell as a computer. You put in code and you get out product. And it's actually, our evolving understanding of how this computer works is growing. But that's the thing that they're going after. How do I go from a place where this is just an accident, we understand what we understand because it happened naturally, to a place where we can control these things? And as a consequence of that, I think in many ways, it is the future of manufacturing. We have a kind of a very traditional view of thinking about how do we make things. But here you have a place where you can program a cell, provide it feedstock like sugar water, and you can get product out of it. And many of these things actually speak to the core of the human condition. How do we manage the environment that we live in? How do we manage the recovery of rare earth minerals? How do we think about health? How do we actually manufacture? This is what we experienced with COVID, where it's one thing to be able to discover a vaccine or a treatment. It's a whole other thing to think about how do you produce that at scale and on a timeline that actually matters. And those processes are biological, actually. And so there's a tremendous amount of potential that's coming out of this. And I think one of the greatest opportunities for Ginkgo right now is around generative AI. How do you teach a large language model not to speak English, but to speak A, C, Gs, and Ts? And there's a lot of reasons. I mean, like, you can think in many ways nature is not that good at it. You could say that English is something that we as humans designed, and yet the LLMs are still really good. On the other hand, we didn't design DNA or ACGs and Ts. We're barely understanding it, and our ability to manipulate it is very bad. So what sort of alpha or upside can you expect from an ability for a multi-billion parameter model to actually understand what's behind this? I think a lot, actually. And then Ginkgo is uniquely situated then because they have this integration of, let's call it the AI, the dry in silico side of this, with the wet lab, right? The foundry, as a highly automated series of operations where you can come up with a piece of DNA, robotically put it into a cell, produce the output of that, test what's come out of that, get feedback on what could work, to create a new design, and do all that in a closed loop environment that's subject to a tremendous amount of automation. It's almost just like unfair how fast you can go. And I think the folks are really seeing that in terms of how it can transform not just their cost of R&D, but how many shots on goal do you get for the money that you're having, and how much can you advance fundamental knowledge? And on top of that, they've built a tremendous code base. So you're not starting from scratch. You're not starting with the knowledge of a single institution. You're actually standing on the shoulders of the collective understanding that Ginkgo's developed over the last 15 years of DNA that's growing so fast. So that their actual internal code base is, I think, roughly 10 times larger than the aggregate sort of external publicly available sources like the Uniprots of the world that people have used to generate like AlphaFold. So you think about what that means and how fast it's growing, the kind of compounding capabilities are quite exciting.
Yeah. That was a great explanation. So,
and an awesome convergence story between AI and life sciences that I think is exciting.
It is. It's
for me personally, I've always felt like there was some kismet there because the first meeting I had with Ginkgo, they told me their product was Foundry. It's like, how could that be? How could that be? Yes. This is amazing.
Yes. No. It's an unbelievable company. And I think the financial markets are having trouble really getting their arms around it. And, the proof will be in the pudding. That I shouldn't have even used that expression. That is so old-fashioned given what we're talking about right now. But anyway, so I thank you so much, Shyam. This has been fabulous, and I am really thrilled that we're able to bring you on this podcast so that you can really explain actually two stories that are not well understood in the marketplace, and they're both so exciting. I guess what I'd like to end on is Alex says we will be the largest AI software. I don't know the exact words, but the largest or the most valuable, maybe that's what he says, AI software company in the world. Clearly, you have said that an incumbent like Microsoft is, in a very good position. So maybe just if you could end on that. When he says that, he says it with such conviction. And part of it is we've heard that Palantir understands the way technology is going to be in 5 to 10 years. Is it something in that next 5 to 10 years that is going to be the aha moment for people who just do not understand this story?
Well, in many ways, I think we think of ourselves as incumbents. So I should kind of clarify that in a sense where what we're talking about is, do you own the pixels that make the decisions and operations today? Or do you have the ability and the distribution to own those pixels and deliver on them? So the fact that within a week we can be working with net new customers to get production level use cases and capture their imagination, I think what we feel, the reason we are so excited is we feel like we have the elegant integration between the human thought, the LLM, and the algorithmic reasoning that's required to actually capture the market. And most folks are going to be stuck in one of these modes or the other, depending on where their platform has limitations. And so in that context, we can go incredibly fast. Many of the aspects of generative AI have meant that parts of our process that were a bottleneck are no longer a bottleneck, that we can reimagine aspects of how we go to market. Instead of doing what would have been otherwise historically really fast, a 6-week pilot, we can now do a 2-day pilot. You think about the opportunities that open up and how much more quickly our customers are able to take the technology and build their own use cases for themselves. So I think there's a lot of, there's probably like 5 or 6 components that feed into the intuition that Alex has, which I share, that really we can take the whole market.
Love that. Yeah, well, this was great. Thank you so much. And thank you, Frank, for teeing up those great questions.
Thank you guys for having me.
Yeah,
Okay.
Thanks, Shyam.
ARC believes that the information presented is
All right, we've got a lot to discuss there. I'm going to be on for about another 15 minutes trying to break down everything I got in my notes here around what's going on. You guys see that? There we go. We got some notes here. That was a very interesting podcast. The NHS deal is not out yet, to the best of my knowledge. Palantir is at $15.59. It's up 5% on the day. You would act as if, the stock's behaving as if the deal is out, but from everything I'm seeing, the deal is not out. And I have the official website pulled up to continuously check if the deal is out or not. So the stock's doing very well. I think either the market knows something is happening or someone in the market, some institutions know that they're going to get the deal, but the deal is not out officially yet. Palantir up 5% on the day, coming off of 6% yesterday. Amazing price action. S&P at 426 as well. 10-year bond is at 4.9. So the fact that the S&P is up, 4.6 is interesting, but Palantir doing well on a good day. And I think someone knows that either they got the deal or the deal is going to be announced, which is why we're seeing some of this price action, because the macro, I don't think, is a reason to send Palantir up about, 8%, 9% in 2 days. So let's break down this deal. I have a couple things I want to talk about. First of all, top level thoughts. I thought this was a great podcast. I think Shyam Sankar did an excellent job basically explaining the origins of Palantir, why Palantir is not a consulting firm, the integration of how they understand data, AIP, models, LLMs, all that good stuff. And I think he got Cathie to understand it at a deeper level. If you notice at the end of the podcast, Cathie goes, thank you for explaining these two companies, Palantir and Ginkgo, that we find incredibly exciting. So I think the probability of Cathie selling out of Palantir again and liquidating her position is minimal unless something breaks in the thesis. But the way she's understanding it and the way I think she got to understand specifically the relationship between engineering and art, which is this whole idea of how an LLM can actually bring value to an organization. There is, believe it or not, quite frankly, a lot of philosophy, in the words of Alex Karp, that is instituted and integrated into this software to make it valuable to the end consumer, because Palantir doesn't have a consumer product, but AIP is basically working with consumers, users in an organization via LLMs. That's an interesting thought process I just came to. Palantir doesn't have a consumer product, but if they're helping you build LLMs, those LLMs are going to be used by one day, right now it has about 5,000 users, Shyam Sankar said, but tens of thousands of hundreds of thousands of people if they scale to many, many thousands of enterprises. And I know that's a long way from now, but if that's the case, you've got thousands of users, regular people using AIP. So in a sense, there is a consumer orientation towards it, not from a business perspective, but rather from a go-to-market strategy in terms of how they're selling AIP, which means you need a level of science and art to be able to connect those things together and come to some important conclusions. So let's talk about what Shyam Sankar had to say. Overall, high-level thoughts. I thought he did a great job connecting the dots. Number one, he says the integration of data is going at an exponential speed, and there's two levels to this. Number one, there's more data to integrate ever than before within an organization. That speaks to the levels of volumes of data that are accreting within an organization. And number two, there's a new number of sources, an expanding number of sources to be able to integrate that data. So not only do you have a crap ton of data, you've got more sources where you're getting the data from. What does this mean for Palantir? It means there is an integration of data conundrum for every organization, because not only are they getting more data, but they're getting so many more places where they're getting the data from, that if you don't have an ontological view, an ontology of all that data coming together, then it is very, very difficult at the end of the day for you to have a meaningful understanding of your organization. So I think the integration of data part that Shyam Sankar talked about in the beginning of the podcast was really interesting. Next thing that was really important, Cathie said, look, straight up, are you a consulting firm? Your gross margins are like 82%. It doesn't look like you're a consulting firm. The contracts you're getting don't seem to suggest you're a consulting firm. Are you a consulting firm or not? I think Shyam has a pretty good answer on this. And his answer is one of the things that I've been trying to stress in my videos many, many times. Palantir is partnering with their clients. One can interpret that as you are consulting with your clients. The problem is consultants get paid by the hour or some, flat fee for the month to be able to build fancy models and presentations. Palantir is selling software. The difference, I think, is where the discovery of the opportunity lies if you're a Palantir investor. You can be a partner with your clients and build highly customizable, important software for them and still sell them the software, not the consulting. So yes, you are technically consulting with the client to figure out what piece of software they want, but then you're selling them stuff that has 82% gross margins. And so what Shyam really tried to focus on is that the reason people call us a consulting firm is because we partner with these clients and we step in their shoes, was his exact words, to try to figure out what are the problems they're going through. And we've seen this. I mean, there's a million case studies I can go through of Palantir actually working with their clients to try to come up with a solution. And once they do that, then that solution is pretty damn sticky, as we can see by some of the contracts we got this week and potentially this NHS contract. That stickiness is going to yield results, and particularly software results in terms of margins, for a very long time. So Palantir's ability to understand your problems, not just sell you an out-of-the-box piece of software and say, hey, it's up to you to go integrate it, but work with you to do the integration, leads them to actually being a partner, and it leads from a business perspective to more upsells. The reason they were able to get AIP in the hands of 150 customers in the past 10 weeks is because those customers already understood Foundry. And so they were willing to give Palantir, which is a partner to them, the opportunity to help them get more into the world of generative AI. And it ultimately gives you a better marketing opportunity to get these clients to understand the value accretion that you can provide to them with your new services. That is why I think the consulting narrative makes sense, but it's not a real narrative from a market valuation perspective, because they're not KPMG. They're not Accenture. I mean, they're selling high-level software that has millions and millions of dollars attached to it. They're just consulting with those clients to help them figure out some of these things in the first place. So on that consulting point, I thought that was really good. Third, COVID. Basically, Shyam said, look, the COVID crisis was another place where people started to recognize they have none of their data in order, and they had to fundamentally revamp how they thought about data and the architecture of data within their organization. So COVID was a big turning point for Palantir, essentially to get recognized by a lot of companies that needed services in the blink of an eye to be able to reamp their organizations and actually get things in the right place. Next thing he talks about, LLMs. So Cathie Wood basically said, look, Do you think you were ready for LLMs? Was this a moment where you could actually have a chance to, capitalize on LLMs? Did it disrupt your business? What were you thinking of? Shyam responds by basically saying, LLMs are perfect for us because the only thing that makes LLMs valuable, and I'll connect this to the ontology question that Cathie asked, which is basically like, what is ontology? Is you need an ontology of your data. You need something that understands the integration of all the sources for an LLM to be valuable. And so when Cathie asked about the disruptive nature of LLMs, basically Shyam's answer was like, they're not disrupting us because we have been in the space working with this stuff. LLMs is just an interesting user interface to be able to interact with them. But the back end, which is what makes them valuable in the first place, is what we've had. He even mentioned a meeting he had with a high-level government official that said, I can't get any value from ChatGPT because I just don't think it understands the context of the reality of the problems I have. AIP being incorporated into an organization and bringing the magic of LLMs to your specific use case is where the value ultimately comes from. And that's why LLMs are actually net positive for Palantir, and why AIP, he thinks, can be a game changer when it comes to implementing it into the enterprise. Next thing he talked about, AI bubble. Cathie said, look, is there an AI bubble? And Shyam said something very interesting here. He said there's going to be two areas where AI value goes to. Number one is going to be the top line GPU compute processors. These are the people that actually create the machines that do all the computation. NVIDIA obviously is the winner there. He basically implicitly said NVIDIA is going to win massively because of this. And he said the second point of value is going to come to the software application stack. So this, and by the way, when he sees NVIDIA is going to win, it doesn't mean the stock price is going to win. It means like the company is going to get a ton of demand, but the stock may be already baking in all that demand, right? So it's separating the stock from the company. The second layer is the applications. So his argument is that the companies that are able to integrate AI-enabled products, and particularly generative AI, into the actual applications they build are going to be the companies that win. The best example was Microsoft. Microsoft has the distribution. They have 430 million people across the entire world using Office, Windows, PowerPoint, etc. You bring on a Copilot subscription for an extra $30 a month and get even 10% of those 430 million to adopt that. That's AI enabled. The applications that Microsoft sells are going to be enhanced via the value that a generative AI can be implemented within these applications. That's where there is something good in the context for companies like Microsoft. So his argument here was that incumbents that have distribution, i.e. 430 million people, Google, billions of users, Facebook, billions of users, that can then integrate AI into the applications is what's going to win. And I could not agree with him more in this context. There was a really interesting thing that Spotify put out yesterday that allows any podcast to be listened to in any language. So if you have, the Lex Friedman podcast in English, you can listen to it in Spanish, in Hindi, in all these other different languages. And Spotify just put out that feature yesterday. Now, it's a cool feature. It's an interesting feature. It makes sense. The problem is I know at least 100 different startups in the tech space that have been working on multimodal language translation LLM models that they were thinking could become a billion-dollar business one day. And then Spotify just took that business and in 2 seconds decided to integrate it into a platform that has 500 million users. So the platforms that have distribution are likely going to commoditize the AI or generative AI innovation, because distribution is the only thing that matters when it comes to actually getting that AI distribution out into the masses. And so Shyam Sankar seems pretty bullish on some of the incumbents. As a result of that, he follows up at the end of the podcast by saying, we are the incumbents. And this was a very interesting line by Shyam Sankar. At the end, Cathie Wood kind of follows up on that original question about this AI bubble and who's going to get the value from it. And when Shyam said Microsoft, she's like, all right, well, if Microsoft's going to get the value, and Alex Karp says you're going to be the most important software company in the world, how do you reconcile you saying Microsoft, because of their massive distribution, is going to get a ton of value on the application layer, but you guys are also an application layer company, Foundry, AIP, etc. You're a software company. How are you guys going to get the value of this whole AI quote unquote bubble that's going on and be the one or two players that's going to win if the incumbents, as you just said 20 minutes ago, are going to be the winners? And Shyam says, sorry, I didn't clarify. We are the mother effing incumbents. And this was my favorite line. I wish he said it like that, because that would have been, see, if Karp did this interview, he might have actually banged on the table and said it. And when he says that, his argument, and now you can disagree, you can agree with that, but I think what he's saying is not from a, we're not as big as Microsoft perspective. He's more so saying, we've been working in AI for 20 years. We know this space. And so he is thinking of himself and Palantir as part of the Microsofts and Googles of the world. And yes, the market cap is not there. Yes, the company is not that big, but I like that the CTO is basically saying, no. I forgot to mention, I'm part of the incumbent class that I'm talking about because I've been building this technology. He was Palantir's 12th employee, right? The original forward deployed engineer. So when he says I was building this tech, he actually means I was building this shit for the past 20 years. We know this better than everyone. The reason we think, and he quotes Alex Karp by saying we can go after and capture the whole market, is because we have the tools and resources to be able to offer this in the most meaningful way. And the example he brings here that I thought was really, really interesting is the go-to-market. The 150 customers they have on AIP, the 5,000 users that they have growing 50% month over month. He said the reason we were able to roll something out like that within a matter of weeks from ChatGPT going mainstream in March to April, Palantir releasing AIP and then AIP for defense is because they had everything ready to go. So you may argue, okay, Palantir doesn't have the distribution of a Microsoft. Obviously, Microsoft has thousands of enterprise clients. Palantir has a measly 421. But in order to get those 421 clients, that's going to do $2.1 billion of revenue for them this year to be able to adopt their next set of innovations, which is the AI infrastructure stack for the enterprise, i.e. AIP. And to get those 4,000 clients, you've got to move like a mother. You've got to move quick. You've got to move quick, especially when he mentioned all of this funding is entering the AI space. So every single little nit and gritty startup is trying to go after that market as well. So I kind of agree with him in one context when he says we are part of the incumbents from a technological perspective, and because that tech influences their go-to-market, their ability to get that shit out there immediately. I haven't heard of Snowflake working in Ukraine. I haven't seen Snowflake at the White House AI Summit. I mean, you look at that AI Summit, you got Elon, Sundar Pichai, Satya Nadella, Zuckerberg, trillions of dollars of market cap in one room. And you got little old Alex Karp, $30 billion company sitting in the same room. Where was Snowflakes? Where was the Databricks? Where was the Datadog? Where were these guys? I didn't see them there. And it's maybe because they weren't invited there because they aren't actually playing as big of a role in the context of AI as we think that they might be doing, even though they're bigger companies than Palantir in terms of their growth rate and their distribution. Snowflake having 8,000 clients, Palantir having 400. But that's not the company I want to invest on. I don't want to invest a company that has 8,000 clients and is really not innovating their go-to-market strategy, even though they have fancy presentations and partnerships with NVIDIA and they have to acquire search engines to help them build AI enterprise technology. I want to bet on the company that's innovating it internally and is getting 150 clients within 2 months, growing 50% month over month because they believe they have the technology stack that allows them to get the distribution inevitably from the business sense. So in that respect, I do think Shyam makes a really good point about them potentially being the actual incumbents at the end of the day and being able to get these partnerships. Final thing I'll say right here is Ginkgo. I'll do a little quick thoughts on this. Shyam is actually very excited for Ginkgo. A lot of people have been asking me, Amit, what do you think about Ginkgo? I started studying Ginkgo back in October. I was very excited for them. Ginkgo down 1% on the day. I think it's a really exciting company. The problem is I don't think the valuation is interesting enough for me given their growth. And from a business perspective, I wouldn't buy it if I was using my head. If I was using my heart and I had a true 20-year timeline, like I actually 20-year timeline, like you're actually patient, you're not just fake patient, then the potential of them is endless because synthetic biology, which is what Shyam was talking about, is bigger than computer science. Synthetic biology can build hardware daily products synthetically. Like it when you really go deep into this stuff, it is actually insane. The problem is I don't know if Ginkgo is going to be the one that wins here, and I don't like that the insiders have been selling shares. So I have more business reasons for why I'm not buying the stock. But Shyam is on the board of directors for Ginkgo. I think Shyam is obviously a very smart person. He understands the company. Cathie thinks she understands it in a contrarian perspective, different than the market. And maybe the stock will end up taking off over the next couple of years as the thesis plays out. But we'll have to see if it ends up happening. All right, there we go. That was my analysis of the Cathie Wood Shyam Sankar interview. Let's take one last look at the stock and then we'll end it here. I thought this was a great podcast, great interview. A lot of gems were said. I definitely will be reacting to some of these in separate videos and going a little bit more deeper in terms of what Shyam had to say. Palantir at $15.43, up 3.9% on the day. We do not have the NHS deal. We did get $60 million this morning from the NIH in the United States, 3-year deal, $20 million per year. And we got $250 million 2 days ago, $83 million per year for 3 years from the Army for R&D into AI and machine learning. But we do not know yet about the NHS. So Palantir's up, not bad on the day. We will see if the NHS deal comes out. Awesome interview with Shyam Sankar and Cathie Wood. And we'll see if this ends up happening. Thank you, everybody. I appreciate it. Thank you all for joining, being on the longer version of the morning stream. I will see you guys tomorrow, and I'll have some videos coming out later today breaking down some more of this stuff. Thank you, everybody. See you on the next one.